All right. We are live and direct. Let's get this party started. Let's get this scrolling down below. What is matter of fact? What is sports? Oh, it's forgot. It's bowl season. So yeah, we're gonna have some college bowl games going down, and Joker's be like, "Look, bro, I'm trying to get this last red zone in from a school, right? I'm with you on that. I understand, guys. Enjoy yourself. We are impromptu with what we're doing today, so that's fine as well. We're just trying to get some work in, right? We're building the body of politics, as they say. All right, so let's see. Hopefully this thing goes well over here. Let's see, get all my metrics together, right? Because I know YouTube will be definitely causing a little hesitation. I just hope you guys got the notification. Of course, if it went out, for those who are subscribed to the channel, I can't say whether or not I'm a victim of, you know, shadow banning, but I know it sometimes it happens when you do certain shows about certain topics, right? Considering that of the, you know, the jib jab, right, stuff like that, right? That'll definitely get your channel under scrutiny. Of course, we don't do a whole lot of programming on that stuff. We just speak about it from a financial perspective, and that's it. You know, we just investors, so we're trying to, you know, we weigh data. We're not concerned with whether or not a person is for or against it. That's their own free will. We want to know whether or not Novavax is going to go to the moon, right? Or Moderna or Pfizer, right? What's going on, over brother Mark, brother Matt's in the building. I see you popped in the house. Peace, power, profit to you as well on this Saturday, right? Matter of fact, did you get the notification, brother Mathis? Did it show up? I guess in your feed somewhere, or I know I posted it in the group though. So yeah, that's that, right? But I still have to ask that because I know sometimes, you know, there's that moment where, you know, it will go out. Sometimes it may not go out, right? Who knows? Nonetheless, we're gonna make the best of the situation, and that's that, right? So the previous attempted broadcast was definitely, you know, it was hijacked, right? It was a it was a no pass, right? But nonetheless, we're gonna see if we can add that into this one, right? So we're gonna just use what we got to get what we want. You know, that kind of reality, right? So, you know, within that framework of those who are able to, you know, catch the live right now, who maybe saw notifications from earlier, please disregard the first one. Not that we didn't have the intention to do that, but just that YouTube saw different. And that's fine because again, a lot of the work we use, we pull it from different sources. Sometimes again, they do have parameters surrounding that, right? And we get that, right? This whole idea of licenses and all this stuff, and yeah, we get it, right? Peace, power, and profit to, you know, to all that that comes along with that, right? So shout out, brother Zane in the building. Peace, power, and profit to you as well, right? Shout out to everybody who again who may have a little time to, you know, pop in and be with the family today. Again, we're not going to be, you know, extenuously long. We're going to, you know, try to get in and get out. Again, I do understand that this is a day where people are relaxing, chillaxing, right? Macking and all that, right? All right. But nonetheless, anytime we can get a chance to put some body of work out there, we're going to do that. And even more so right now with the climate within the fiscal, you know, perspective in dealing with, you know, the investment world, the economy as a whole, things surrounding, you know, the virus. Of course, what is that doing right now? You know, to markets, not just in America but globally, right? Because there's a ripple effect with that. We know that, right? It's not, you know, it's no secret to that at this point. And of course, we've got breaking news over the weekend thus far concerning, you know, the ideal of the Omicron, right? Omicron. I want to keep calling it Omicron, but the Omicron virus obviously is starting to pick up a little bit more, and it's plaguing a lot of those Eastern, you know, nations. Of course, outside of our country, obviously. So Europe and Asia, they're starting to feel the effects of Omicron, right? Right. So oh my, right? Omicron, right? Right. Like somebody's like Omicron, right? Think about Micron stock, right? The microchip company. But yeah. But anyway, so yeah, there's a lot of stuff coming out. Typically weekends are time where a lot of publication of presses, press companies, they get a chance to just data dump a lot of information that they compile throughout the week. This one is no different. It's even more because we're going into the winter months. It's the holiday season. People are moving, people traveling. They're trying to, compile all that data. Who's moving, who's not, who's scared, who's not, who's, somewhere trying to figure out what's the next big stock to buy, who's ready to dump stocks, whatever, right? Crypto, gold, assets, classes, diversification or divergence from them, whatever. It's a lot, right? But it's not, because if you follow the extent of how this stuff works, then you know how to track it without necessarily feeling like you got to go overboard to get all the information. Some people have to bounce around different publications to get a better understanding of what is really out there for as news. If you are an investor, your mind is already equipped and built for this. To us, it's just no different than like people, spend all day on Facebook scrolling and Instagram and Twitter. For us, it's like, we scroll, boom, we got everything we need literally in microseconds. Our brain is hardwired in a way where we interpret data totally different than a lot of other people. Number one, we don't have implicit biases. That's the first, right? We don't do implicit biases as an investor. Why? Because you will lose all your money on your feelings, right? You deep in your feels and your money finna follow right along with it. So emotions do not matter, in that perspective, right? Don't necessarily mean you don't have principles and dynamics of your, morals that you follow, whatever. But when it comes to money don't care about your feelings, right? It's more like forget your feelings, right? You just got to be more thorough or methodical in terms of how you position that money, right? So that's important as investors and traders. We realize that, which will help you in your personal life too, because again, you're trying to, hey, be a little bit more, equally yoked and dealing with, life as a whole, not just kind of, strong arming your way through and, your way of the highway reality. What's going on, Ober Snotball in the building? See you in the house. Peace, power, and profit to you. Ober Chris Woods in the building. Shout out to Ober Chris in the house. Go subscribe to his YouTube channel, guys. He's putting out content, building it up. Definitely need to get him well over 100,000 subscribers, right? Over 100,000, right? We're going to put that out there. The ancestors pick that up, right? Run with that thing like a football on Saturday, right? Shout out to him as well. And everybody that's tuning in who's building content, not necessarily even on YouTube. If you got a page where you're disseminating information that's edifying people, shout out to you, right? Because a lot of time people don't get that kind of level of credit, right? We just want to look for people who, just got a job, get 1 million likes. The person that started a job or started a business or created a job for somebody else, he get like 5 or 6 likes and, it's crickets. Like that dynamic of way people think in this paradigm is like really backwards, right? People want to reward mediocrity and, and dump on success. But at the level that they dump on success, we're talking about people who really came from within their ranks. These are people that they should be very excited about, but they necessarily, I don't know. I guess they feel like they're being left behind. I don't know. Anyway, moving on. So inflation, right? Inflation, right? So I've started the day's, mental mindscape in terms of wanting to deal with, capitalism as a whole, the ideal of the monetary system as we did that video documentary of the day, revisited that we did last year, so to speak. And pretty much how they go hand in hand: capitalism, inflation, the monetary system, how it's created, what was the purpose of it being created, uh you know the servicing that it requires to keep it up and running. It's a lot that goes into understanding the breakdown of economics, right? But for the most part, these things rule our life, right? Again, you can't feed yourself and clothe yourself and shelter yourself and all these things unless you have some kind of understanding of financial, wherewithal, right? Now, and these are more modern countries, if you want to say that, because I hate the term third world, but we know they use it, right? It's kind of a swipe, a swipe or a slide at, some of these brown and black nations, right? We get that, right? But I'll just keep it 100, but I like to be 100 too. So again, within that, the ideal that a lot of these people are producing products, producing goods, growing vegetables, herding cattle, whatever. They're producing the economic base to a degree as well, but they are subjected to the bigger societies out there, because again, these are a lot of where they're pulling from, essentially, right? They're pulling from these places, or they're dependent upon these nations to buy their products, their goods, their services, to cattle, whatever, their commodities, right? But within doing that, of course, they can also be priced out even more. Why? Because they're already at a different exchange rate. They're being undercut for what they really, are offering, right? They're not getting true value for what their products are really worth. We understand that whole hustle, right? There's no secret why JP Morgan keeps getting hit with, fines for, tempering and tampering with the Forex market, and Goldman Sachs and the Bank of America. They have, track records where they've been fined billions and billions of dollars for Forex manipulation. When you manipulate the Forex market, you're essentially manipulating currency, right? So the same reason why America sometimes want to get mad, throw a hissy fit, and cry foul when China, devalues its currency, right? So we can have better pricing power. Well, America does it all the time, right? Like nothing in America, that happens here is wrong, right? It's the adverse effect of somebody else doing something. But ultimately, we end up paying for it, meaning we, the people on the back end, end up paying for it. Why? Because we are the collateral damage, and we are also the sheep that they run to fleece when they make bad economic policy. Hence, what we're dealing with inflation, right? We had a 40-year, you got 40-year, reunion numbers where we never hit these levels before in terms of our monetary fiscal policy. These are not good numbers, right? These are not good stats. These are bad stats, right? These are bad stats. And so, as you see on my screen here, just out the gate, again, dealing with inflation, right? Buying less with more, right? That's today's topic discussion, right? We're gonna mix it around a little bit, but buying less with more, right? Buying less with more. Let that marinate for a moment. You're buying less with more, right? And that's, you will say, well, I'm paying about the same price. Well, you're getting less. So essentially, you're still buying more for less, right? You're buying less, excuse me, with more. Let me repeat that. You're buying less with more, right? More money. You're spending more because the price of your dollar has been diluted. So you got to add more money to that, to that value to equate to that of what you're paying, or what you're getting, I should say, on the back end because of inflation, right? It drives up the cost of goods and services. That's the whole, ideology behind inflation, what makes it such a bad thing for societies. Unless you're just really trying to, ramp up your production or your labor, you kind of funnel people into the idea of, hey, we have, the cost of inflation is going up because we have less labor participation. We need you guys to get to work, whatever. Yeah, you making, do those little thing in spurts, but if you contract it out longer than necessary, then it could be problematic, right? It could be problematic, right? So with that being said, again, we're going to speak about inflation a little bit here today. We're going to add in that of the capitalism aspect, what we was going to do earlier. They got snipped, and hopefully they don't get snipped this time, but if they do, that's fine. We'll just rewind and run it back, all right? But we want to discuss a couple of those things, like say, just give you guys a little bit something to kind of work with over the weekend before we get back into the markets this coming week. And because this past week it was nothing short of shy of fireworks, right? You guys were sitting there, watching this stuff, and probably active in the markets like I was, and it was just, man, was it something exciting or what? Inflation, right? Inflation and volatility, right? They go hand in hand. They should be two of the same. And that's what we saw. So we saw SP 500 literally, guys, man, how do we start that? Like, let's jump over into that chart real quick, then we'll get into the more, data-driven topic, orientation surrounding inflation and the cost of what it's doing to everybody's, pocketbooks, purses, or whatever, right? But this is just, it's an extension of what we've been witnessing, right? Because a lot of people trying to figure out, how I'm, I mean, seriously, how are we going to survive, dealing and trying to fight all these different variants of COVID, COVID that's popping up, these mutations, dealing with a government that's very stingy. They only want to cater to those who are wealthy, right? Stock market, et cetera, et cetera. And yet we're entering to another cyclical season of the virus when it ramps up, because this is the winter months. More people are sheltered in, they're cold, they're inside. They still want to party and have a good time, but a lot of times people get more lax and loose in the winter months because they feel like they in a comfort space. In comes the virus. In come a friend that ain't been over in like so long, and he pops up, and just so happily he got that, he got that Rona, right? Or she pops up and she got that Rona. Now everybody in that one little setting is potential, collateral damage to catching it. With or without the jab, right? It doesn't matter, because the jab does not stop transmission, right? It is only perturbs the ideal of, serious illness or death. And that's still, still questionable at this point, because a lot of these newer mutations are eating the jab. It's literally eating the jab like a filet mignon steak, right? Couldn't make this stuff up, not making it up. So yeah, it's like dang if you don't, but that's not necessarily the advice I'm saying or giving, because I'm not a medical, advice practitioner. I'm just someone that's using common sense based upon my understanding of biology and science that I've gotten throughout my years of education and self-study, and like anybody else, right? You're trying to figure out what's best good for you and yours, right? And that's all we can do. So moving on from that. So again, just be safe out there, nothing else, guys. That's my public service announcement. PSA, be safe, guys. Be safe, right? Be safe. All right. So jumping right onto the chart a little bit again, just using the SP 500 as a barometer of inflation. Why? Because the money printer is well and dandy, right? As you see again, just using the thumbnail that I have today, right? The 12-month percentage change in consumer price index. So we know that CPI number is something, is something special, right? Because the markets, are subjected to it, right? Because it, gives a lucid picture of what people are spending money on, right? What's the cost of those goods and services that they're spending their money on, and whether or not they're spending more, and getting less, essentially, right? And that's basically what is the case, because there's less production, which also costs, goods and services to go up. Well, that's just not the only catalyst or the only culprit. It's also what? Excessive money printing, which we know that to be the case because the Federal Reserve has been on this quantitative easing journey or cycle since like forever, right? Of course, it got ramped up more in 2019 during September during the reverse repo operations, where they also included that into that of QE3 that was already happening. And so now people saying we're doing QE4. QE4 obviously came on the back end of COVID, meaning they upped the ideal of buying more bonds, they upped the ideal of buying more mortgage-backed securities, right? So basically, backstopping your mortgage debt, right? Now, that stuff is all good and dandy under the aspect of the moratoriums, like we said before. When those things, come off, meaning the government side says we're going to remove that, right? Well, the Fed is still just doing the back end of the bond side. That has nothing to do with you being able to still, provide your own bill, for your mortgages and this, that, and the third. So, a lot of this stuff is going to come to a head, so to speak, and you're going to have to be very prudent and understanding where you're at financially, and so you don't waste your time and your money. Because you're going to need it next year. In my opinion, I think we're going to need it as a society as a whole, because things are not going to be as peachy as we witnessed because of all this, excessive money printing and, living our best life through the stock market, because, it was the best and only thing in town that people felt comfortable in because it had all this support, this accommodative that the Feds brought. That's going to be different next year. Let me be the first to tell you that's going to be a little bit more different next year. And a lot of you guys already know that. So it's just going to make us better headhunters. That's all. We're going to be very selective in what we choose, how we choose it, and particularly how we buy into these positions, right? So no sweat off our back. We built for this, right? That's why we have conversations like this. That's why we, bring on, or bring up the type of topics that get people to invoke thought. All right. So going to the screen real quick here, as you can see here, this is your S&P 500 here of late, right? Let me just go blow it all the way up, right? I guess that didn't blow up any that much more, whatever. But anyway, so what we witnessed with the CPI data that came out, previously, what we dealt with the PPI data that came out previously, meaning, the following week before this, right? The previous week, excuse me. And now going into this week where we had the FOMC meeting, what we witnessed was markets still trying to continue on in this rally. And for what it's worth, failing a little bit here at some points of key resistance. Why these points of key resistance? Because we're dealing with the all-time high potential breakout for blue skies and going for, for higher and higher heights, right? Because we feel like we've shrugged off everything else in the past that may have been bad for markets. We priced everything in. COVID, priced it in. Tsunami, hurricanes, priced it in. Tornadoes, priced it in. Loss of wages and because wage increase stagnation, even though we got some wage increases, but inflation came and ate that up. So you're not really benefiting off getting a raise. Price it in. Build Back Better plan, potentially sputtering, not sputtering, trying to get it enacted, whatever, price it in, right? The infrastructure bill, price it in. I mean, what the debt ceiling increase? Okay, yeah, we coming down to the last minute, literally the last seconds of the clock. Yeah, this is good. Price it in. I mean, you name it, they've been able to price that stuff into the market. Why? Because look where we came from. Look where we came from, right? All this stuff has just been baked into the markets, right? Let me put that back over. I'm sorry. So here we are today, again in a position here. If I need to lock that way it don't move, right? Here we are today in a position where we're just sitting there like, man, this is unreal, right? Because nobody ever in history, even people like Warren Buffett, they're perplexed. They've never seen a market like this ever in their lifetime. And these are some of the pinnacle people that we resort to for as historical data and the way markets was back in their time in terms of how we are today. And yet they've never witnessed nothing like this. That says a lot. Seriously, guys, that says a lot, right? Whether you look into those kind of things or not, it says a lot about the extent to how desperate the corporation of America is becoming in terms of trying to always look like it's stronger than what it really is. And I don't know if that's a good thing or bad, because it's not necessarily something that you want to flaunt in front of your detractors abroad, because they're catching it right now too. Like, about to really living their best life. You got some people still doing better than others, but they're not living their best life. They dodging the virus like everybody else. They dealing with supply chain issues like everybody else, right? China's dealing with these things too, even though they try to act like they're not. They're catching it over there. Matter of fact, they're close to going back into lockdown too, right? Besides some other nations that we just witnessed came out of out of the woodwork today, speaking about they may go into lockdown, right? So yeah, we're like, yeah, man, we listening, right? We letting them talk, right? But we know different, right? We know different, right? So again, just using this real quick, this I don't know, this consolidation period where we in this bigger channel here, between 450 and basically the all-time high up here in there 473, whatever, 475. Well, guess what? That's a 20 plus, 20 plus the 30 point, close to that of a channel where we're now starting to hit a moment of indecisiveness, right? Are we topping out or are we setting up for a bigger run? That is the question you got to ask yourself going forward, because if you say to yourself, inflation as a whole, now that we've got a little bit more clarity from Jerome Powell at this last FOMC meeting, that it's not transitory, but we do believe that it's starting to finally peak. Like they finally crying wolf, right? Like, we've been saying that it's not a wolf, it's not a wolf, it's not a wolf, it's not a big deal. Now it's actually, they figure out, okay, it's a wolf out there. But we got buckshots in the cabinet, right? We had one buckshot shell left. We thought we were out of ammo, so that's why we were trying to, act like we, big deal. Anyway, so this is what you have to deal with going into 2022. Are you now in a position where you could say, well, it's risk on the same way we had risk on in 2020 post helicopter money, Fed money, and 2021? Or do you have to now be more selective in your investment strategy or thesis? Why? Because markets are not going to be so easily consumed and bought up like they were the last year and a half, year, 8, 9, 10 months. That's just based by the numbers, right? And then the idea that they're getting ready to start tapering more aggressive. They're already starting, obviously. They're getting ready to start raising rates more aggressive. Now they're only doing quarter basis point, but that's still a lot to kind of get markets kind of feel a little bit more, a little shaky, right? Get them a little nervous. And they're pricing in 6 of them by 2024, right? 6 quarter basis point rate hikes by 2024. 3 coming potentially as early as next year, 2 in 2023 and 2 in 2024. And those are all subjected to change, meaning they can speed them up, they can increase them, or they can dial them back, right? Who knows, right? But for the most part, as of now, all the data from the inflationary side of things, PPI, CPI, labor statistics as a whole, what people are dealing with for employment, the idea of COVID starting to spike back up, that is subject to change. And therefore, there goes your thesis. Now, that doesn't necessarily mean you just, if you got long-term investors out there, that don't mean you just run for the hills. That means you just be more patient and cautious about buying in at all-time highs, but stocks that have very high, price and earning rate, equity ratios or whatever. And you just be a little more conscious about, holding some of that money in dry powder, right? Cash, reserves, right? Get out a lot of margin, stay out of margin much as possible. At least at this point, till you get a bit more clarity to what's going on. My opinion, that's just my opinion. That's not investment advice. Protect yourself, basically. That's the whole part of this, right? Of being more conscious, right? You have to understand how to protect yourself. So the same way we got news that at this day, literally on this moment here, as you can see here, this is on the hourly chart, where we got all that information about what? Okay, yeah, Federal Reserve comes out on the 15th of December, which was Wednesday. Pretty much tells the world what we kind of figured they was going to say, and they added more to it, right? Because we were ready for it. Oh, and we're going to potentially raise, interest rates at least 6 times, right? Wall Street was not expecting that. They was, after the fact, they may say they thought about it, but no, they were lying. They'd be lying. So they couldn't price it in, is my point. Also, the fact that we knew that they was going to increase the tapering to 30 billion as opposed to 15 billion that they're doing month over month, excuse me. There's going to increase it to 30 billion. That part we knew. Now, also, but within that, the tone around the value, how and why they're going to speed up the tapering, that's a part of what Wall Street also will claim that they kind of, I guess, baked into the market, but it's not true, because the reasoning behind it is the fact that the data, what they call the organic data indicators out there, dealing with like the breadth of the market, again, CPI, PPI, even though things can be cooked, but the interest rates as a whole, right? The 10-year and the 2-year, right? We're getting close to having some yield inversions right now. The 2-year starting to outpace a lot of these 10, and all that stuff. They're getting close to starting to invert on some of the 2-month thing. If one of them, I could be wrong, 2-month yield. So they're starting to have this imbalance where they're trying to flatten this yield out, because again, the price of goods and services are still being, a thorn, right, in the side of a lot of these economists' side, where they can't, get their projections balanced out properly. Why? Because right when they think this thing's starting to peak, they get surprised again and it ramps up and goes higher. So there's a terminology known around, or there's this thought known around the markets that once the inflation genie is out the bottle, you're in trouble. And the only way you can put it back into the bottle, right, like a virus, essentially, is you got to come up with some kind of form of a vaccine, monetary vaccine policy. In most cases, it just resorts to raising interest rates, right? Because that keeps people more prudent. Because when there's not, and they're just kind of wild west of accessing credit and just blowing money because you think the Fed's got your back, that's what you call gasoline moments for your economy. You have less labor participation, but you got more people spending money through credit and just borrow money at cheap interest rate, because that's the whole idea of what causes it, because people borrow money at low interest rates and they're using it for what? For whatever reason, investing, plethora, shopping, online, etc., etc. Right? But no means to really revamp those things that they're taking away from the earth, right? So that causes things to go up. Now, going forward, looking at the SP 500 here as a whole, right? Again, it is still obviously bullish, right? From the greater scheme of things. And if you just say, like we always like to do, right? If we got a 20-25 point channel that we're in right now, basically, right? 450 to 475, right? 474, 475. That means anywhere, 12 to 13 points, from the top or the bottom, right? That's where you have to start figuring out where, you're going to obviously be able to kind of, gauge this market, right? Split the middle down, the market down the middle, play your levels in a way where, you don't get, you don't basically overcompensate the scenario, essentially, right? So again, using that, that window, right? At or around, let's say 450, right? Because there's a gap down there at 450. Or you can say literally at 449, right? So we'll use this one. So this little gap right here, you see, I'm going to draw this bar across it there, so that way you follow me, right? That way I don't lose nobody here. That big old bar right there, right? Therein lies the channel now that we're in, right? So I'm going to change the color down here to maybe like Carolina blue or something, right? I mean, cold down there. Get down there, it's going to be a cold winter, right? Hope it doesn't. So up here at the top of here, this yellow one up here, of course, right? That one there, we're gonna do that one in like a hot red, right? Because we overheating when we get up there. but that means there's also potential for blue sky, breakouts, right? So here's your market somewhere close to that of the middle, right? So again, we're talking about a 25-point window. That puts us, from 474 to roughly around about 460, 459, 460. That puts us right near that mid range, right? That middle range. Now, it's no secret. See where the market closed at this past Friday? Literally right at the midpoint. Could make this stuff up, guys. Literally right at the midpoint. Wall Street knows something. They always do, right? These people ain't, crazy. These algos are being programmed to play these pivots too. And we need to be thorough and learn how to play them too, because this is how the market works, right? So even though it seems like it's a doom and gloom society in essence to that in inflation, because we know that they're doing everything they can to save the market. Why? Because they feel like that's all they have left, right? They use the terminology Tina, right? There is no other alternative, right? People don't want to go out there and do other things that they haven't been programmed for, rated for, or more, positioned for. If they don't have to, if they feel like they still can use the stock market as a means of income. And that's basically what's been happening. People been using their 401k, dipping into them, savings, and they've been understanding now, well, man, we had a Fed that's just going out their way to keep the market up. I might well put that money in the market because it ain't gonna do nothing sitting, over here in this rod and, or this 401k and ain't really, getting that real big traction that I know it could get in the SP 500, right? Or the QQQs, whatever, the tech sector, whatever. So you got a lot of people doing that. They were speculating on a lot of these different indices because they were just rocking into the moon. That's neither, bad or good. It's just that they took advantage of the opportunity that was afforded to them. Now that, again, inflation is starting to rear itself in a way where people can't run from that, yeah, it's probably going to get a little bit more serious. Why? Because all those stocks that were just going to the moon, up, 600%, 500%, 300%, 40%, 80%, and basically in under a year, even though we're getting close to the end of the year, and even backtracking before that, let's go back to when COVID hit. These stocks are up a ton because they were considered or deemed safety plays, or they had bigger moats, right? Bigger money balance sheets where they can weather a storm, void of the government bailouts that a lot of these these companies got because they were just bad in fiduciary responsibilities. But see, that's what makes the stock market such a unique entity, because it really rewards bad behavior. It's an instrument or apparatus that rewards bad behavior. Good, bad, or indifferent to it, it will reward it. If you're in the right place at the right time, it don't care about your feelings. It don't care about your religion. It don't care about your personal feelings, or, whatever, your ideology, any of that stuff. It doesn't care. The only thing it's trying to do is trying to hit some numbers. It's trying to get to some levels, some pivots, right? Peak to trough. It's trying to play these things and act as if your feelings don't matter. Yet people's pocketbooks matter right now because they're dealing with inflation. Again, they're buying less with more. You go to the gas station, that's the one that really hits you in the gut, right? You pull up at the gas station, you've been riding that gas out all week and you just been putting gas in there. You just been putting it out because you're scared to go to the pump, right? You're scared to go to the pump, right? You pull up at the pump that day, you try to find the cheapest gas station in your neck of the wood. Boy, you pull up in that thing, boy, especially you got one of them gas guzzlers. Ooh. Right? You like, man, even if you got a little money, right? You still like, God, dog, boy, I'm finna feel it. They finna hit me in the teeth, right? They gonna kick me in the in the backside. And as soon as you put that thing in there, right? Like Cat Williams said, ain't no gas in that car. Click, click. Now you put it in there and it go to clicking. Like, well, ain't no gas in that car. You can try to put 10 in, 10 on 2, they ain't gonna work. That's reality now because you're starting to feel that. You're feeling that at the pump, right? Well, the idea that the oil prices are skyrocketing is just more of an indication that we know that they're also going to use that as a signal, meaning those who control that aspect of the OPECs and the people dealing with, in the oil market as a way to, push their agenda, right? They don't want to be undercut from being able to, pretty much, fatten up their pockets during this moment of what inflation, volatility, this idea that COVID is still around. So because of that, we got to compensate. If we have to go back in the lockdown, we need to keep our prices a barrel up now. We're gonna pump less so we can get top dollar for it, so we can shelter ourselves for a rainy day in case we go back into some kind of form of a global panic. So they're benefiting off this too. That's the price of inflation, right? You're going to pay higher costs for goods and services, especially commodities, when you're diluting the currency around the world through obviously heavy printing of money, which obviously, in a scarcity environment where people are less active and productive, that drives up the cost for these goods and services, right? The whole supply and demand thing. So yeah, I'm just using UCO as one of the trackers because UCO just been banging this pullback recently and it's starting to ramp back up. It's still in the bullish flag here. You're looking at it here. It still has basically what higher lows coming off its ramp. Even from the beginning of this year, even from last year, you can see how this thing just been going up and up and up. So oil is definitely in its last push heyday, if you want to call that or not, because they still got to deal with the electrification of the world at some point, EV values and all that. But they still going to have a use case. So at the end of the day, this is their glory run, right? Unless they can find out a way to reinvent themselves, they finna go for the gusto. They're going to keep price of barrel up high. You're going to keep paying a little bit higher at the gas station. And then they're going to turn around and say, it's not us. The reason why we're not going to pump more barrels is because of your government. It's the central banks that keep printing all this money. If they're not going to raise interest rates, then guess what? They'll need for us to kind of, pump excessive barrels of oil, and we're not necessarily sure what's going to happen with the virus and all that. So you see how that works? You kind of boxed in. And that's basically what's happening with the Fed. They boxed into a corner because they were just overly compensating for something that they should not have pressed the gas pedal so long. And because of that, they overheating everybody else's economy as an indirect effect, right? Look at Turkey, right? Turkey is pretty much cratering right now before our very eyes. The Turkish lira, it's just pretty much just plummeting, right? Their economy is plummeting. I remember Greece went through that maybe 2-3 years ago, if that. They went through the same scenario, right? Their economy just plummeted, right? Because they can't keep up. And the main aspect of their production is basically like tourism. Like people ain't going to Greece, to buy the latest, electrical vehicle, right? You go to Greece to walk around old ruins and talk about how it was in their heyday, right? They ain't really got no factories like over there. So they have a very sensitive economy. And if those things get disrupted by any means, they're in trouble. Not just from the value of COVID, but what? They're being priced at the market because every other nation that got money is diluting their currency, which hurts their tourism intake. So that's how you got to measure inflation as a whole, not just in America, but on a global scale. And, it's a ripple effect, like we said before. So when you see these things like this and you realize, okay, yeah, this is why the market is so, sketchy. And you got to find the ones that are really producing that can give you good bang for your buck. This is a part of us being more thorough. So yeah, oil is definitely still bullish, and it's going to get probably a little bit more bullish going forward. Why? Because again, we starting to hear all this stuff about lockdowns again, right? So that's going to really make the Saudis and Russia and many others, be a little bit more stingy in pumping, right? Which is going to keep the price of the oil up because it's still being driven now by the inflation bubble, right? The inflation bubble is keeping oil up now because that's going to be the excuse. All right, so just make sure you guys are aware of that. So obviously, hint, hint, wink, wink. Keep your eye on some of the oil stocks, right? Because energy plays are good inflationary hedges. I repeat, energy sectors, not every aspect of it, but you got to find the right ones within the energy sector are great for inflationary hedging, right? So that's a part of what we talk about when we say, what to buy, right? Where to buy, right? Of course, the idea of how to invest better, right? And so that's a part of our daily bread, right? So what's going on? I got some more family coming in the building. What's going on? Allison in the building. What's going on? Nim PF in the house. What's going on? Family, everything in the house, right? Everybody else may be popping in and out, of course, on the weekend. So those are the things that you have to kind of keep in mind. So yeah, you just have to be a little bit more again, prudent in your thesis. Find those those gems that are out there. A lot of them are already set in motion, but it's going to waver between growth and value stocks at least for the next 2 to 3 months, right? It's going to be a war between growth and value stocks. We already know that, right? Growth don't want to relinquish their high PEs. Value stocks saying, "Hey, bro, we've been oversold. We've been left for dead. We've been having to deal with COVID. We ain't as big as some of y'all tech companies, but guess what? We need to eat too." And so you're going to have hedge funds, analysts, and people like that jockeying and fighting, trying to figure out which of the value plays are revolutionary to be in at this point, because they're going to be the ones that may be the poster children for the big growth plays of next year, meaning the growth of their stock, not necessarily them moving into a growth stock perspective, which some of them can, but you need to be conscious of that. So anytime you hear us talk about growth versus value versus momentum plays, we focus on who those players are, right? The founded ones, because every stock ain't a value play, right? Worthy of a value play. And every growth stock ain't worthy of, feeling like you're just comfortably secure as a growth stock, right? Because everything else that's being getting taken to the woodshed lately. Look at Zoom, right? Look at Wayfair, right? Look at some of these stocks that were just riding the wave during COVID, right? And look at them now, right? Let's go to their daily charts. Look at them now. Look at how they are coming back to earth. They had a meteoric rise off the earth, right? They took that Falcon 9 jet from Elon, right? Rocket from Elon, and Elon revoked their little pass, right? And look at they coming back down a little bit. Look at Wayfair went up to almost dang near 370, 380 something. Dang there, right? Look at the bounce, how it just bounced, just coming back off its COVID lows, right? It got down as much as $22 and went up as high as like 370, 380. Couldn't make this stuff up, right? And now it's back down to 200. It's trying its best to stay above 200. It just got recently downgraded by JP Morgan and I think a couple other analysts, and then weirdly so, right after it got downgraded, was that them downgrade? Yeah, I think JP Morgan downgraded them the other day, and then Laura Needham from Needham Hedge Fund Investment House, whatever fund manager, she came right in but tried to upgrade on the same day. So that means she bag holding. Anytime you see that happening, that means hedge funds are starting to war at each other now. This is the part where I love about the stock market, because now the carnage of all these greedy analysts, they're starting to reveal their hand. Who's overly leveraged, who's overly, outperforming stocks that don't necessarily need to be outperformed, who's underperforming stocks that necessarily, may not be ready for underperforming because as a reason for them to take profit. And so you're going to start seeing that where people have 2 or 3 upgrades, 2 or 3 downgrades for the same stock sometime in the same day, which is problematic for the algos, right? Because the algos like, okay, how do we trade this today? Right? They're going to start saying, well, who got the bigger weight, right? Which analyst covering in this has a bigger weight? Are they going to go with a JP Morgan over that of a Laura Needham and Needham, associates? See how that works? And so that's to be understood as well. You have to think a little bit more deeper now in terms of how you look at these stocks, regardless of how you feeling about it. But that's the stat. What they say, the standard the market has set up for you to understand. All the jargon and the pontificating that comes along with these analysts always thinking everything is bullish when we know it's typically reasonably not. But as they say, but the caveat is this: what there is no other alternative. So guess what? For Wayfair here, it's the same thing. Look at that gap down there that has to get filled. Look at that gap right here that's yet to get filled. 135. Right, it's sitting at 200 right now. It got back above 200 recent course. It fought to get back above it. It went underneath it and was starting to go down. Then again, it caught that little market jolt that happened recently, literally yesterday, based upon what? Rebalancing, quadruple witching, right? That also helped, Wayfair in a lot of ways get back above that $200 level. Below the linear regression band here, it's in trouble. It fought to get back inside of it. That don't necessarily mean they're back. That means they're still in trouble. That just bought them an extra day, right? That stock gained over 6% yesterday. 6%, 6.5 dang there, over $13 in intraday gains. $13. So yeah, it's still in trouble. Inflation still is a problem, even for companies like Wayfair. Wayfair deals with what? Furniture and stuff like that. A lot of that stuff is coming from where? Overseas. Like seriously, and you got a high PE like this, and people starting to come out of this thing, out of the COVID lockdown, even though we might be going back in, depends on how that work out over the next month or so. But nonetheless, this stock is highly, highly overbought. They ain't selling that, pushing that much furniture, and supply chain issues kicking them in the teeth now. See how that work? I'm just putting out a thought for you guys to look at this stuff and how this stuff goes, because going forward in the next year, these are some of the plays you're going to have to start looking at in terms of they overbought, because this is a value stock. I'm using this as a case study, so this is not me just pinpointing Wayfair saying, hey, this the one y'all need to be focused on. I'm just making the case. Yeah, it's a value stock, right? And it's dealing with supply chain issues. And it's an environment where Wayfair ain't, producing the next cure for cancer. It's overbought furniture and other stuff and knickknacks and accoutrements with housing market probably finna slow down a little bit because the interest rate finna go up. Maybe who finna be, y'all get it. So just be methodical in terms of how you look at everything, from a broad scope. Don't narrow your view, broaden it so you miss no variables. Because again, charts analysis, fundamental analysis, all that. Because I still see a gap down there, right? I still see a gap down there. Matter of fact, I'm gonna draw my little bubble. Always when I see them air pockets in the market, I just draw a bubble. That reminds me, okay, yeah, we might need to come revisit that, right? We might come revisit that bubble at some point. And the fact that we're starting to, it's starting to come back in off its highs a little bit. They ain't really retreating, but it has retreated a lot. We talking about over 170 points, off the peak, right? Off the peak. We've come off, backed off about, again, 170 points. That's a lot. Ever since, beginning of the year to where we are now, even though it don't seem like, because it's just chopping around. Wayfarers have been trading like this all year. It's ugly. It's brutal, especially for option traders. You got to really catch the pivots just right. But again, if you are more, again, patient, you can trade these stocks the same way. So that's why I use stuff like linear regression band. Look at the band. The band here, even going back on the previous earnings, Q2 earnings here, where we got outside the linear regression band, we bounced, got back into it. We came all the way to the top of it, to the T, and bounced off that there. So right there, I'm looking at that as an investor, trader. We can't break out that old resistance area. Guess what? I'm going short, right? Because my back end, risk profile is already defined. I'm right at the back door, right? Basically the back of my heels are on the door. So I'll have no kind of, body can come behind me, sneak behind me, basically my point. False risk. So that's how you get short on markets, when you kind of see those, massive, volatility gaps or swings from peak to trough or trough to peak. That's how you can play with a little bit more risk profile, better risk management, I should say. Right. And so, yeah, from that point on, you just shorten it, right? Hold you short, you ride all the way back down close to it, you bounce it at 225, right? That's a what? From 317 to 220. Look, man, that's almost 100-point pullback. And that happened every bit of August to October, right? So, yeah, a couple months. Yeah, 100-point pullback. Yeah. So that's how big money make money. They'll buy extenuated puts based upon certain levels like that, reading into all the economic other data, and they say, well, I'm gonna buy my puts out, 2 or 3 months in advance, right? 4 months, 6 months, right? They can afford it. They sit on it and just let it work. When it gets to a point where it seems to be kind of, then gutted all the premium that's out there, then cover, and then turn around and go long again, right up to that same level, right? Anytime you break above it, you best believe you'll have some kind of form of, profit taken, and sure enough, right back down again. Here you go. So again, that's how smart people play in the market. And I'm only referencing this today because I want y'all to see this stuff in real time. And so again, when you're out there, putting together a trading idea, thesis, these are things you're going to have to start formulating inside of your game plan. Right? That's just the reality of this stuff, guys. Right? And so it's going to make you a better trader when it's all said and done. Believe that. Right? Believe that. Roku, same reality, right? They downgrading it and upgrading it in the same breath. Again, there we go again. You starting to have that war between the analysts, right? They starting now, they scrapping, they scraping, they're trying to find anything they can because they know next year is not going to be a free fall marketplace with all this tapering and rate hikes. So guess what? You need to start thinking that way too, right? Inflation is not going to end tomorrow. The cost, the CPI number is just not going to back off, 2 or 3% just because they're saying that it's peaking. Like stop, it ain't peaking, right? It's gonna move like a chart like anything else. You may have some pullback, then it can rocket right back up because none of this stuff is ironed out. They still have no clear-cut plan on how they're gonna increase the port authority in a way where you're gonna still get those containers offloaded, import, then offloaded, then get them to their respective places. They just talking us a good game. Oh, we're gonna open the ports up, 24 hours a day, round the clock. We're gonna hire more people. Look, you still gotta wait on these people. If these people that control the containers, these ships ain't, look, I'm just saying, guys, be patient. Be patient and don't be hoodwinked and bamboozled about, politics, right? Because every sitting government or governance has to always drum up, the situation as it's good, even though we know it's not. So that's what I love about it being, an investor and a trader, because I get to remove all the fluff. I don't stand on the Republican or Democratic shoulder. I stand on the shoulders of what? Where that money flowing at, right? Where the money flows, that's where smart people hang out at. Believe that. That ain't just hyperbole. That's reality. Wherever the money flows, smart people are there, right? And that's what we are all trying to do. We're increasing our prowess to be able to read those tea leaves so we can be there as well. So I tell people, yeah, this is the moment. If you didn't last year, the year before, this is the moment to pick up a new hobby, right? It's called investing in trading. Welcome to the world of using, your money to work for you per se, and not feeling like you got to work hard for it. Because a lot of people were smart enough over the last year and a half, 2 years, and they did just that, and they saw exponential gains happen for them to the point where they don't even want to go back into the labor force again. Like, who goes back to the labor force if they took a portion of their 401k and flipped it 2 or 3 times in under a year? Who wants to go back to work with somebody when they feel like they can do that at the house, on the beach, at Starbucks, at Panel Bread, at the Sizzler, or wherever? And that, in itself is like revolutionary. Let that marinate for a moment, right? So this is the mindset, right? This is the mindset. What's going on over Brandon in the building? I see you guys popping in. What's going on over Divine in the house as well? Peace, power, profit to you. What's going on, family? ABD, ASMG in the house as well, right? So yeah, you guys are saying, so you want housing price to drop? Yeah, man. Look, the way that the commodity prices are right now, wood is still going up, lumber is still going up. If lumber prices stay up, yeah, it's gonna cause housing prices as a whole, meaning itself, to be kind of a little bit more risky. And on top of that, the Feds are printing money too, so they ain't making it no better, right? So again, you got a recipe for disaster. That's essentially what it is, guys. It's a recipe for disaster, right? So you look at stuff like the XLB, right? The XLB dealing with materials, right? Okay, what is the material market telling you, right? So if you want to follow the housing market, many other things you can look at too, of course, but this one here definitely it's your bread and butter behind the housing market. Why? Because it's the cost of the materials to build houses and infrastructure, right? They're talking about the Build Back Better plan, all that stuff. That's why this is definitely starting to pick up and go a little higher too. So you got all that factored in there, right? But these things are more richly priced because the steel and the aluminum and the copper and the coat and all that stuff, right? The manganese, right? I'm going all to the cell phone stuff and all, right? But now houses are becoming more smart homes now, right? You're gonna have, microchips in your house now. You're literally gonna have microchips inside of your house built into the infrastructure at some point, not just as a standalone scenario where, or access where Verizon Wire come along and lay you some, some gig, right, or some fiber. Houses are starting to be built with a mainframe already built into the infrastructure itself. Y'all see, y'all was ready for the Jetsons, right? Let's go. It's starting to happen already. So houses are becoming more computerized. So again, if the semiconductor world is being hit because of COVID and supply chain issues, that's gonna make the cost of living for that perspective, or the cost of those things go up even more. The aluminum and the steel and all this stuff, and the fiber and the Cat 5E, Cat 6E, Cat, well, probably Cat 7A now, Cat 7E now. But all this stuff gonna cost more because of labor shortages and less production and dilution of money being printed by the central bank. It's a recipe for disaster. I call it the perfect catastrophe, right? A beautiful catastrophe, right? It's a beautiful catastrophe. And rich people love beautiful catastrophes. Why? Because this is how they make the bulk of their wealth. They got more to invest than the average person. They can afford to swing big money into profitable opportunities. 2 months, 3 months, quarter run, or it could be. See, they can do that. And so that's the whole game plan about how we're trying to better prepare ourselves to do the same exact thing. Increase, increase, increase. Be patient, but always be in the mind of increase. Again, chaotic theory, right? Y'all probably read it. The chaos theory, y'all probably seen it, heard about it, read it at university or in your own right. It's a beautiful catastrophe. People love big money. People love natural disasters. They love, plagues, viruses hitting them. They love this. Why? Because this is where they make the bulk of their wealth. Subprime lending crashes, dot-com bubble crashes. This is how they make the majority of their wealth. They make you feel like it's patriotic to not short the market and don't bet against America. But guess what? When a catastrophe happens, oh, they can't wait to bet against it. Because best believe markets always take the stairs up, but they always come down on the elevator. I repeat, markets love climbing, taking the stairs up, but they love taking the elevator down when there's any kind of bad news. So markets come down a lot faster than it takes for them to go up. And that's when they make the bulk of their wealth, because that's a quick moment in time, or one-off event, or a black swan, or a market, whatever you want to call it, crash, pullback. It happens quickly. You make tons of money off that capitulation and fear. And before you know it, you close out and you're on your way. You did more than what people could have done in 2 or 3 years of waiting the market to go up. See how that worked? A beautiful catastrophe, right? So much so, that I want you guys to really, start to understand the value of how important that is, right? And meaning, why we need to start focusing on, the beautiful catastrophe, so we can be more pronounced in our decision making when these things happen, right? So you realize how you can benefit off hedging, because if you don't hedge, you can find yourself in a lot of trouble, like a lot of people do, right? So much so that I want you guys to really be very, very cautious next year, because they're going to keep trying to beat this drum that everything is okay, it's all good, it's all that. Look, we already starting to hear from the people who caused the bubble that they already know they overshot their mandates. They're in trouble. They backed into a corner. So yeah, they're going to start doing aggressive things to fix this. They caused the problem, and they're going to have to fix it. But guess what? In them causing the problem, all they did was make their wealthy friends and compadres wealthier. And Main Street is going to get stuck holding the bag. Why? Because they believe that what they felt like the government was doing to backstop their scenario was, well endowed and, necessary, but they ain't really benefit from it. All right. So much so, again, that I put together a song for y'all, wrote it myself, produced it, mixed it, and I'm going to play it for you right now. Disclaimer, I just made all that up, but yeah, here's a cut for you.
Everything is twofold. What's joy is pain on the other hand. And what happens when the one that you love is the main cause of your suffering? I need you like I need air to breathe. I need you to save me from me. I'm caught in your wave, I'm drifting away. I need you to save me. Please don't let me drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in. And I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. I'm drowning with all of this darkness surrounding. You need me like you need air to breathe. You want me to save you from me. I know that you're trapped inside this wave. Who's gonna save you? Who's gonna save you from me? I can't see you drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in. And I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect I need to get some air, but it's a toxic addiction. You're a guilty affliction. You can't breathe and you just need some air. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die. But your presence is so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe.
A beautiful catastrophe, right? That's markets to mega capitalists, people who got again boatloads of cash. See, they love these moments. They welcome these moments. A lot of us, right? Y'all like my little production there, right? All right, shout out to the production. Right? I put a little something together every now and then. Right? I got a couple little skills. They ain't got right? Y'all like my little production there, right? Again, that's the reality though. That's the reality, right? I'm gonna post that one up on YouTube too. I'm gonna put it in the maybe in the community section, right? That little video skit. But no, but seriously, that's the markets, right? That's the markets, right? It loves chaotic situations. Why? Because it breeds the need for stimulus. I repeat, it breeds the need for stimulus. And as long as there's stimulus being circulated across some, politician or congressional person's desk, Wall Street looks at that as if, oh, here's another free check. That money's gonna get filtered into some kind of company at some point down the road. We need to figure out where that money is going to be allocated to, because we need to put an outperform rating on that stock and get heavily liquid in it, because that money is or that check is already cut. See, that's the mind of, an analyst. That's the mind of the average investor. Once we realize the power within that, you'll be more poised and positioned to do just that too, right? Because again, this is how this is how markets move, right? This is how markets react to all this stuff, right? It's just a shifting, diverse, a portfolio rebalancing, some would say, right? Right? It's just portfolio rebalancing, right? Again, nothing outside of you guys' wheelhouse to deal with this. So inflation, right? Is inflation good for gold or bad for gold? That's the question I pose to y'all right now. Is inflation good or bad for gold? Right? That's the question I'm just asking. Is inflation good or bad for gold? Press 1 if it's good in the chat. Press 2 if it's bad. Is inflation good for gold or is it bad? Press 1, yes. Press 2, no. Right? You can follow along on Twitter. You can follow along on Facebook as well, guys, if you're able to. Is inflation good for gold? Press 1 for yes. Press 2 for no. Right? I just want to take your temperature a hot second here, right? See how you guys are looking at the market, so to speak, right? Do a little litmus test, right? Take a little temperature, right? Because this stuff is going to be important, right? It's going to be important, right? I want you guys to, to see this, right? And be able to, make sense of it all. Why? Because it's imperative, right? Because a lot of things that may be used for, that use gold, hey, whatever, you may can start measuring markets a little bit more, thoroughly because of that as well, right? So yeah, press 1 if you think it's good or bad for gold. And I'm using this as another backdrop, right, off of what we already been discussing, right? Because the inflation right now is, it's alive and and apparent that it's not going to go away no time soon. So yeah, of course, we know we witnessed the gold meteoric rise, last year because of COVID. And then we saw it pull back, consolidate. Gold has been in the consolidation channel. Clearly, you can see it here. And then the linear regression band is starting to kind of tilt upward a little bit, slightly into a 45-degree angle to a degree. All right. And that's signaling, yeah, where stocks might have been, partying hard like it's 1999 with the past near 2 years. Gold was like, okay, yeah, y'all had fun, but now it's time for y'all to hold my beer. All right. Hold my little martini, hold my little, my little Jack and Coke or whatever you drink, right? My little vegan root beer, right? Your little elderberry and lime squeeze drink, right? And it's starting to kind of peak up, and starting to kind of show itself. Well, hey, yeah, it's time for us to kind of punch the clock too. So, yeah, inflation definitely is a problem for equities as a whole, particularly some of them, but like commodities that really benefit from the price of these services going up, the scarcity value within that, it's supposed to be a really good hedge, right, for inflation. But the reason why it's been getting beat down, why, is because they got the dollar, so the USD or the Dixie so messed up, the Doxy, people call it the Dox or the Dixie, right? They got the USD dollar so volatile. Gold can't really catch traction because if the dollar going up, that means that's the price of gold is going to be coming down. That's odd, right? Because typically when rates kind of get the rising a little bit, it should kind of put a damper on that. But the reckless policy that the Fed has implemented, it has caused the market to go haywire. Dollar don't know if it need to go up or come down. Gold don't know if it need to go up and come down. The VIX itself trying to figure out, did we break out? Do we stay subdued? Do we just let let them continue to kill the market every day by letting the algos run amok? This is the market we've been watching, right? This is the market. We 100% right, brother Mathis. Inflation drives the value of the dollar down and adds value to precious metals like gold. That's right. Now, that ain't been the stationary case because we've been seeing the dollar rip. We've been seeing the dollar dip. We've been seeing the 10-year yield, that particular yield, 10-year yield, because we always, always profess, watch the 10-year yield over all the other years. Now, keep your eye on the 2-year and even more so right now, the 2-year right now, because of all this, inflation, flattening of the yield curve and all that too. But yeah, that's typically how that's supposed to work, but it ain't been working that way, right? It has not been working that way. So until they, when I say they, meaning markets back off, right? Meaning he's greedy behind, mega capitalists back off and let the markets try to figure this stuff out on its own, because a lot of the what they call the organic indicators, they're already telling you that they were telling you that inflation was a problem literally 5 or 6 months ago, if not earlier. But again, when you got a excessive Fed who refuses to take responsibility for bad action, to say that we're just trying to overshoot rather than undershoot our target because we feel like we're more protected if we plan for a rainy day and print more than we need to, at least that puts us on better footing where we can have what they call a soft landing in terms of lowering our tapering our quantitative easing and allow the stock market to have what they call a soft landing as well. Like they want to paint the best perfect fantasy condition where everybody that's wealthy really succeeds. They telling you literally in your face, like, yeah, for anybody who's poor, who's struggling right now, yeah, good luck. That's up to Congress to make your life better. But as of now, we're so-called quote unquote trying to backstop the economy, as if the economy ain't Main Street people, which that's how it's supposed to be measured, but it's not, because ultimately what we witnessed, that they switched that paradigm literally years ago. Wall Street got very crafty and learning how to now shift that, take that, and now Wall Street is the barometer. So wealthy people look at Wall Street as the barometer of the economy. Main Street people says, oh, we're it because we're the one that's paying the tax and this, that, and we're the one that profit the money. Yeah, you're right. You're the sheep. You're right. You're the sheep. You're the cattle. You're the people that they're going to fleece regardless to backstop or bankroll their bad decisions or money policies. Facts. If you do nothing to change that dynamic, guess what? They're going to keep riding your back until you stand up and straighten up your spine. Simple as that. That's how this stuff works. You ain't gonna beat the market by trying to outwork it on a job for Mr. Charlie. I keep telling people that. They keep trying to convince me that no, I'm straight, but I'm good. I'm just get me 2 jobs, 3 jobs. Ain't nothing wrong with the job. That's not my conversation, my pushback. My pushback, you need to be well organized and figuring out how to get multiple streams of income coming in around your life. You can't sit around and play the game where I got time. Like, no, time is a commodity. Time is a commodity. It's valuable. Time is money. Y'all hear these little sayings all the time. People always say it, but they don't really want to live by it. They want to still allow themselves to be caught up in diverse temptations and be trivialized and distracted, essentially. Like, no, I ain't got time to waste. Not me. I don't. I'm sorry, I don't. So yeah, they can have all the other stuff that, they can have the Parthenon, they can have, the arena, right? The pantheon of people at the Coliseum, they can have all that. I'm good. That's just me. I don't have time to waste like that because I did that. Been there, done that, did that. Right? That's valuable time I could be using like I'm doing right now. Right. And again, shout out to everybody that's paying attention right now too, because again, not that you have to, not as to swipe against people who not. It's just that, we're just trying to game plan. We're just trying to game plan for our future a little better. That's it. Simple as that. No harm, no foul, no swipe, no shade, no none of that. This just the reality of things. However you partition your time is an indication of where you're trying to work. What do you position yourself for in terms of hitting your goals? That's simple. That's simple, right? And so that's why we want to, make sure you have an equal balance. If you like to still turn up and do all those things, that's fine. But also equate or, again, partition some of that time and get your study on, right? Get your edification on, get your autodidact on, right? Because you're not going to be able to survive, again, hoping, the government gonna show up at your house and one day with, one of them little, sweepstake checks. They out there with a big old sweepstake check, right? Some cameras out there, like, no, bro, that ain't the real world. That's not how the real world works, right? So until that happens on a daily basis, on a real world basis, guess what? We're gonna get our sweepstake check right over here on, assets like gold and silver and Bitcoin, whatever. I'm just making a case for what asset classes, right? Diversification. The whole reality within that is that we're just trying to find, again, find us some alpha the same way that everybody's trying to find alpha. So it's the same thing. I asked the question: is Bitcoin an inflationary hedge or no? Is Bitcoin good in an inflationary environment or bad? Right? That's the question I asked. All right. Is it a inflationary hedge to buy Bitcoin during high inflation, or is it not? Of late, it would seem like it's not. Why? Because somehow the S&P 500 found a way to diverge itself to Bitcoin, or Bitcoin found a way to diverge itself with what? With S&P 500. Couldn't make this stuff up. Well, that's because a lot of the analysts have been programming their algos to try to play within that confine that all the stimulus checks and the money that came along with stimulus has also boosted the gains of Bitcoin. So by virtue of that, guess what? It's somewhat tied to equity markets. Ain't that some mess? This is decentralized platform, decentralized currency, but somehow it's not connected to the stock market. Boy, these people so ruthless. Couldn't make this though. Oh, bruh, they playing that game. Yeah, they are playing that game. They bought that life. Yep. I hate to say it, but they're about that life. So anything they can use it to kind of fuel their bubble even more. And then as soon as it fails, see, that's why Bitcoin is bad. See how that's the game they play. As soon as it has a pullback or something like that bad, that ain't good. See, this is why crypto is bad. That's why I need to be banned and outlawed. But within that, they're using, these same ETFs that are, off the even CME, the futures with the Bitcoin, and the ETF, they're using these things to also help fuel the bottom line of the equity markets too. These people ain't got, look, they two sides. Must be two sides. They must be two sides. They switch up on you on a dime. Right? They love to criticize, when they make the money, and then they'll praise when they feel like it's a boom cycle. Right? Straight crooks, man. That's Wall Street at its finest, right? That's why we do still let the monetary system break down. If y'all haven't seen that video, go watch it. I'm gonna pull it up. Matter of fact, I need to put it in the end cards when this go off. you had a way to go see it, right? Or I'll post a link or something. I was trying to whatever. But you need to see how this stuff works, how these people operate, right? The next we're gonna do is that quants, right? The quants and greed thing again. All right, that's gonna be our next little documentary lessons that we're gonna do. We're doing our year in review of some of these documentaries that we did last year in the middle of COVID that really gave us a good baseline of information to work with going forward, right? To see exactly how Wall Street moves, how investment bankers move, and all these different things like that. So again, we don't be confused to bamboozle, right? So that's why that stuff is important, because now we're starting to realize that we're seeing it happen in real time. So Bitcoin, yeah, I'm not worried. Once I had this conversation a while back, again, and we see the levels of again, interest are concerned. We got our little pivot points down here for a reason. We see we down here near 42, right? Until 42 obviously becomes the problem. I'm saying play ball, right? Play ball, right? Don't be confused about what you see, what's going on here. So we play pivots, we don't play feelings. I repeat, we play pivots, we don't play feelings. Whether you for or you're against, right? My feelings are not connected to none of these assets. Every asset out there that's moved by algo or market maker is a pump and dump. Apple, pump and dump. Tesla, pump and dump. Lucid, pump and dump. Google, pump and dump. Amazon, pump and dump. What's your favorite company? Pump and dump. All right, let's get that out the way right now, so that way you don't get caught in your feelings, right? So that might cause you to have a little, bad indigestion. You might want to unsubscribe from the channel because I said your little company, a pump and dump, where they all are. Again, show me where Apple ran to the aid of helping people during COVID. Show me where Tesla ran to the aid of people helping them during COVID. Oh, but Elon, you got, electrical. I like the company. I like the tech. I'm not a fool, right? I've realized the reality of philanthropy goes much further than a soundbite, right? Totally. And then some people say, well, it's not their responsibility. See, you can't have it both ways, right? You can't say they're trying to make humanity better, but then you don't want to hold them accountable when they do stupid stuff. So again, I just say they pump it down. Use them the same way that they're using you is my point. Use them the same way they're going to use you. And matter of fact, if you don't use them, they're going to use you anyway. True story. Right? Inflation kicking real people in the teeth. Right? All these fake fugazi people who benefit from all the values, all these high stock prices, these people can care less when they get inside their gated community. Again, people who buy Ferraris and Lamborghinis are not crying about the price of the gas at the gas pump. Living in Southern California, right, in Newport, Newport area of California. So, you guys ever been over there in that area, over there off the the famous that famous jet over there called the Wedge, right? One of my old CEOs, he actually got a summer home where I don't even call it summer, it's his beach house, right? Because he stay up there in the hills of Pelican. What is that? Pelican? What's it called? Pelican Brief or Point or something like that. Literally, Kobe Bryant like 4 houses down from this guy, right? I've been to it, right? Both his houses out there. This is when I was doing my corporate America thing. And again, everything in that area over there is like super lavish and super rich, right? Like the average car dealership over there is like a BMW dealership, right? You don't see like Chevrolet, Toyota. No, the average dealership is like BMW. Everything else is Bugattis, the foreign stuff and the Bentleys, all that stuff. So gas is crazy, but the people ain't crying, pulling up in their, gas guzzling, ICE vehicle, complaining about the gas prices are up, right? They just swipe the little card and just move on, right? Hit the gas pedal out the gas pedal, burn up the little asphalt. See, wealthy people realize that the game is about more, right? It's about more, right? More equals more to them. They play the numbers game. People who don't understand that algorithm, they're concerned with trying to, sympathy, dry run people into accepting their reality, right? No, I'm like this because of the system more. So yeah, the system definitely is a big part of it, but a lot of it also depends on what do you, again, like I said earlier, partition your time to learn, right? What do you partition in terms of your time to get better as a person? Because that's what's going to save you, right? That's what's going to save you. Right? Asset acquiring or asset acquisition, meaning these stocks, these, if you Forex market, if you're doing other stuff like that, that's just a small blip, right, of your fiduciary responsibility for your own life. Now, again, up and down, right? We all been there, right? Man, I had some bad choices in my life. I tell you what, like anybody else, potentially, possibly. Over time, you begin to refine it, right? You get better, you get more thorough, you become more consistent, and in doing so, now you can move with a little bit more fluidity. Why? Because no one person has too much power over you, right? People want to leverage you when they know you needy. When you got things where you don't need them, oh, then you become a threat, right? You become a threat. So my thing is, let me help you deleverage people off your back, right? If there's such a thing, right? It's a book, probably a t-shirt moment. Let me help you deleverage people off of your back, right? Because you're not going to be able to do that again trying to outwork Mr. Charlie on his payroll, on his time clock, right? Mr. Charlie on the golf course, I'm sorry, you hitting the clock while you watching paint dry. So yeah, you best be got you some stock options out there too while you on the clock. You best be going to the bathroom, checking checking your ROVs, your TSP, your 401k, your stock options. You want to your crypto. You want to be going to the bathroom, go check that kind of stuff in the bathroom. Right? I'm going to the bathroom break. I'm going to check my money. Right? Ain't going there to drop off no money. Right? From eating at an expensive place, trying to impress somebody that they need to be impressed by me last night. No, I'm going to check some money. Right? Again, that's just the reality of things, because it's too late in the game now to act like you got time. You don't. I'm sorry. How much did the wealth increases worth over the past near 2 years because of COVID? Only to the tune of near trillions of dollars. That's not me making that up. They pocketed up to that of $1 trillion+ in profits, meaning the wealthy, the CEOs, the wealthy people, not companies. We talking about individuals in a collective of people who got big money out there. They pocketed well over $1 trillion after that chaotic moment of COVID. And we're still dealing with COVID, of course, but they banked on that. They banked on that because they had money to go all in, go all in the tech sector, go all in on Apple and Amazon and Tesla. And some of them even hit stock options in AMC. While they was criticizing in public, they were secretly behind the back door buying stock options in AMC and GameStop when it was going to the moon. They can do that, right? They can do that, right? So again, man, people always want to get you conditioned to say, no, you're doing the right thing, baby. Just keep doing what you've been doing. You'll be all right. My prayer's going to protect your bank account. Okay. No swipe, no shade. Look, that ain't how the real world works. Capitalism is, look, it's a free-for-all game, but it's a dangerous game, right? It's a free-for-all game, right? But it's a dangerous game. We're just trying to, help people see it from a different angle. That no more, no less. Right? What's going on, Eba Tamika in the building? See you in the popped in. Shout out to you, Eba Tamika in the house. Right? Peace, power, and profit. You do as well today, Eba. Right? Family trading is a lifestyle in the building. Shout out to you as well. See you in the building. Shout out to you. Thank you for coming through today. Hit the like button, subscribe, share all that stuff. Right? I rather say that stuff. I get caught up in just getting into the information. I'm old school. Right? I just want to come on and share some information. Right? So inflation. So yeah, these assets are just, again, adverse effects to that. No more, no less. You need to figure out which one's going to give you best bang for your buck. It ain't hard to go on Google, type in what are some of the best, inflationary stocks to buy, right? What are the best inflationary head stocks to buy, right? And then from there you can start doing deductive reasoning, do your research backwards, figure out, verify, falsify all the froth and the bad news like a scientific experiment, and get down to the facts of things, right? That's how you do good methodology. Falsify it. Don't just take everybody's word for it because they're cheerleading for one side over the other. That's not how the real world works. Life is about variables. There's no diametric, complete opposites, right? There are spectrums of it, but life is variables, right? It's variable. There's shades of gray, even in science and information. Know that, guys, because people will have you in an echo chamber and have your whole reality twisted, right? And I'm like, if it's dealing with money, of course, I'm speaking to that perspective reference point as an investor or trader. Yeah, you need to make sure your feelings are not, attached to this moment. Make sure that your best mental or brain value is leading the charge here, right? Because that's what's going to help you in the long run, right? To lock in that profit, quote unquote, right? Lock in the profit, right? Lock in gain, lock in that bag, right? Don't hold the bag, but collect the bag, right? So important. So inflation, right? So, people ask the question, a lot of times, like, man, how do you navigate this stuff? How do you get through, you know, inflationary moments, right? Well, hey, let me help you out, right? Let me share a little something to you that you all can, definitely pull up yourself, or maybe the validity of it is not quite there, but it's relevant, right? So, you ask a question like, why is everything so expensive, right? Going back as far as 1982 levels of inflation, right? Now we had inflation going way back in the 70s that was just like crazy too, right? So, of course, let's do a little soundbite, right? Let's do a little soundbite. Let's hear USA Today speak in terms of their value, what they figure, to the extent of how surging inflation is affecting the average person or average, American or whomever, whatever. But let's get uh, some analytical, data-driven commentary uh, from, AP polls and Pew Research polling, data collected to kind of figure out how they value and view inflation. 1 second. All right. Make sure my mic is up here. Okay. Yep. You ready? You ready to go? Fair Use Act. Fair Use Act. Fair Use Act.
Well, yeah, as a business owner, everything is more expensive. I own a cafe, which is a place based in a cafe here, and my business partner and I see that everything that we need, coffee cups, coffee, sugar, milk, everything is a lot more expensive. Everything is inflated.
Personal experience everywhere. Gas, food, beef, chicken, you name it. Everything's up minimum 15% in the case of gas, as you know, so it's almost doubled. Yeah, obviously, it hurts.
Oh, it hurts, right? It hurts, right? Yeah, for a lot of people, that's the case. Again, Wall Street will have you believe that it's not a big deal, right? You can bear it a little bit more, right? That's what the Biden administration is telling people actually too. Hey, again, I'm not Republican, or I'm a Democrat. I'm neither of the other two. I don't do political games. But it's always a political angle to everything, right? But yeah, inflation is kicking everybody in the teeth, right? Again, 6.8%. Couldn't make this stuff up. So as I showed on my screen, right? Just running through that really quick on the backstop to that, right? Running through that really quickly here, right? Because you guys know it as I do what's going on out there, right? No secret, no secret. What do you see right here? Again, we using this little, breakdown here, right? Cereal products. How many of you guys eat cereal, right? How many of y'all eat cereal, right? Like, bro, that kind of question that, yeah, bro, yeah, I eat some cereal, but my favorite cereal, Life cereal or something. I don't know what you eat out there. I like the most spelt cereal. Right? I eat spelt, right? Spelt cereal. Now, what's your favorite cereal, right? Cereal products, right? Products, right? Cereal products up, 4.6%. You're paying an additional 4.6% for your favorite cereal, box of cereal. Why? Because everything inside that box, from the box itself to the labeling, to the coloring that goes on the package, to the plastic bag that harbor the cereals inside of it, to the sugar and the different processes that took to ground those, oats up, or that, that grain up to become the cereal. So all that stuff is more expensive. The gas that it took the machine to do all that stuff is up right now. See how that works? That's inflation. That's all the little accoutrements that make up one thing, and then the cost of that is magnified in terms of the finished product and the good, That's the inflation, the carrying cost. Cereal up 4.6%. Bacon. How many y'all like bacon? How many y'all eat bacon in the morning? How many y'all can't leave that swine alone? Ain't no shots fired. Shots fired, right? Bah, 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 bah. Shots fired, right? Right? Bacon, right? 21%. 21% for bacon. Right? Even that cheap bacon. You can't even escape by trying to buy the cheap bacon, right? They're gonna hit you across the head with that cheap bacon too. You trying to get great value bacon, it's still expensive. Like, man, it's supposed to be cheaper. How great value bacon is more expensive than the Smithfield or Oscar Mayer bacon or whatever that stuff is. And I used to eat that mess, yeah, right? Bacon up 21%. Can't escape it, right? Beef, again, beef still same way. Beef way up there, right? Beef up there around at the same thing, 21%. Right? Pork in general. Now notice that pork and bacon are the same thing, right? But bacon is more expensive than even the value of the whole pork, right? Pork loin, I guess, maybe pork shoulder, maybe a little pork steak. But bacon, the refinement process that it takes to get regular pork curated into making bacon in the process for bacon, that's why bacon more expensive, and more people demand it more than just basic pork item. So that's why it's even more. Hey, you better start getting some oyster mushrooms like I do. Tastes just like bacon. Make your little sea salt on there, call it a day. Shots fired. Right? Bacon, again, pork up 16.8%. Ham, 10.7%. So your little Thanksgiving ham, it was more expensive this year, huh? You got a smaller ham for the same price you were buying last year, didn't it? Your little ham was all anemic, right? It was on crack, right, man? What happened to the ham this year, man? Look, man, inflation, bro. Man, to be happy you finna get you at least some kind of ham. 10.7% on your little ham. These are the latest numbers, right? So there ain't none. These ain't these are some of the latest numbers, right? Chicken, chicken up there, same way. Chicken up there around about 9%, 10%. Chicken, like who don't eat chicken, right? Chick-fil-A, whomever, Zaxby's, chicken, this chicken, that KFC, Popeye, regular gross chicken, that chicken all over. It's the most consumed item literally on the planet, right? As far as a meat item. They hitting chicken across the head, even the cluck up about 10%. Fish and seafood in itself is already expensive in a lot of ways anyway, right? Because we know the cost even to get that stuff, caught, packaged, shipped, or whatever. 8% is a lot. If Maine lobster going rate is, let's say, $22, $25 a pound for Maine lobster, right? Let's just say 20 to 25. If that's up additional 8%, what's 8% on $20? Right? 8% on $20 is basically, if you think about 10% of that value, you can already kind of start putting that in the context of what that's going to look like on a $25 price tag, right? And that's just being probably frugal, right? I'm probably being frugal. It's probably more. I'm sure it is. Like king crab legs, stuff like that. King crab legs and crab legs. That stuff is super expensive. It's 8% kick on that. In some places, it's gonna be more because they're gonna gouge you, right? They're gonna raise the prices because our market just can't really sustain because we're a small operation. So we had to tack on additional 5% carrying costs. So yeah, I know the national average is 8%, but we have to charge literally 13%, or if not, we're not gonna be able to pay our employees, right? They play on your heartstring. You want them crab legs really bad too, right? You're gonna pay that extra 5%. So they got you. Got him. You paying extra on crab. What's going on, family? More the truth. Peace, power, and profit to your family. Right? Shout out to the family coming in the building. Right? Just dealing with this whole inflation thing, right? So seafood, 8%. Eggs, 8%. Right? Eggs, 8%. Hitting you across the head. You can't even escape eggs. You trying to be on a keto diet. Keto diet is still expensive too. Got him. Right? Eggs, all that. Got him. Can't run. Can't run. Right? Inflation. Right? Milk, 4.6%. Milk, man. Milk, guys. Milk. Hitting them, right? Of course, that's why you need to go on nut milk, maybe. I don't know. Got cow milk tearing you up anyway. I'm shots firing right now on everybody. Y'all know I'm going to do that. Whatever. Gas, all types. 58%, basically 59%. Or 60%, because they always going to try to undershoot them. These numbers are probably high in what the areas, but 60% for gas. That's the one that, again, that's hitting everybody in the stomach right now. because you can't avoid this one. If you got an automobile, unless you got a Tesla electric car, you can't avoid this tax here, this bill here. OPEC ain't doing nothing to make it better. The Saudis are smiling, the Russians are smiling. Look, some of these nations in Africa, that hopefully they benefit. I got to say that. Hopefully they benefit from it. They getting pillaged still, raped and robbed. 58%, right? Apparel, right? Your new clothing, 5%, 5% kicker, right? 5% kicker on clothing, right? That matters in some places. Trust me, that matters, right? 5% on what? On a pair of what? Whatever your favorite little, what they call Balenciagos, whatever people saying that stuff. Man, I don't know what that stuff is, man. I'm straight, right? 5% kicker, right? And I know it varies between certain apparel. So yeah, like I said, and that's not even what they call the gouging price. That's the base case price. Then the department store is going to gouge a little more out of you because they're going to say we're getting hit because of COVID. We have less people. See, that's the part people don't plan for. New vehicles up 11%. That's a lot. You talking about $50,000, $60,000, $70,000 vehicles, $100,000 vehicle. Now you're going to pay additional 11% on top of that. Got him. That's for new vehicles. Well, guess what? Used vehicles are even more. Why? Because the cost to make the new vehicle is more expensive because there's a supply chain issue. The materials, the cost is up. The chips that they need to put in these cars now, because most cars have become more computers on wheels. So because of that, they're not making as many of them because they are pretty much stagnant because they need certain things to finish those cars. So guess what? People run into used cars because they already fabricated on lots. So they're buying the close things that they can to a new car. But guess what the carrying cost of that is? 31% increase on used cars. Literally, you can take your used car right now, clean it up, put a little polish on it, and resell it and get a good bang for your buck now. When before it probably depreciating faster than you can, then you can scramble egg and get it cooked and get it out, in the pan, out the pan. Now they're paying you 31% kicker on your used vehicle. 31%. Basically 32%. Let that marinate. Your used hoopty now is worth something now. Couldn't make this stuff up, right? So antique cars are even more. Imagine that. If you're trying to buy like a donk, right? Especially my southern people, you trying to buy you a 71, 72, or 73, or even a 74 donk, you finna pay. Them cars right now going for over 100,000. Some of them, you can find a little rust bucket one pay maybe like 40 grand, 50, 60 grand. They already collect the items, but even the ones that are decent condition, like you finna pay near 100,000, 70,000, 80,000, 100,000 plus for them cars. Couldn't make this stuff up. It's crazy out there. It's crazy, right? Used cars kicking people in the teeth. What else we got? Cars, right? Car and truck rentals. Look at the rental car company. Hertz kicking you in the teeth too. Avis, Budget, right? Whoever you use, Enterprise, they're kicking you in the teeth. Car and truck rentals up 37%. But you might well catch a train for that price. Get on the plane, possibly. Look, it ain't that much driving, sightseeing. Look, I'm straight. I catch a Uber or something. I don't know. Couldn't make this stuff up, right? 37% for used cars and truck. Energy costs. Energy costs are kicking. Oh man, energy right now is crazy. 33% energy kicker through the inflation. 33% extra energy costs are now being, pushed out to people who, need energy, right? Power, of course, 33% kicker. Hotels, 25%. Like Airbnb, anyone, right? Whatever, right? 25%. Right? And you got hopefully you can dodge, catching, the virus and all that too. So that's not even the hazard cost, right? The hazard cost. See, yeah, it gets worse. Furniture and bedding up 12% on furniture and bedding, right? I mean, you look Egyptian 1,003 count sheets. Yeah, you're gonna pay 11 extra 12% on that, right? Your little bed and all that stuff that y'all, yeah, whatever. Moving on. Cigarettes, right? Cigarettes up right around about near 9-10%. Cigarettes, right? Like seriously, y'all still smoking cigarettes? No shots fired, but shots fired at this point. I'm not even be nice. Cigarettes are just like that's like bottom feeder stuff at this point. Man, come on, guys, we can do better. Let's get our health right, right? And I'm saying it because I got people in my family I love and care about, and I just want that to be a past of their life too. So that's why I must be straightforward with cigarettes. Cigarettes is just like garbage. Like it's no need to even do that. Like at this point, like all the health issues around it, it's not even up for debate. But cigarette prices themselves are skyrocketing. That's crazy, right? Moving on. Televisions, right? 8% on televisions. 8% on televisions. So yeah, if you did get lucky in Black, quote unquote, Black Friday, that foolishness, right? Yeah, that was your time to kind of run, try to get you one because yeah, you probably just basically paid the base cost that it would have been during that time, you know, in the event that we're not dealing with inflation. So what kind of sale you really got? Maybe. See how they got you? Oh, we lowered a little bit because you know the Black Friday sale, but it just went back to the base rate for what inflation costs are already costing these people to make the television. You just paid the base rate again. That would have been, you know, standard at that time of season to buy that TV, possibly. Shots fired. All right. Laundry and dry cleaning, same way, up about near 7, you know, near 8%. What else we got here? Tools, right? Tools and hardware, same way, you know, they up 7%. Electricity, just, you know, powering stuff through maybe other little ancillary items, maybe, I don't know, generators, maybe some electricity. I'm not sure because of that, you know, how that folds into the energy cost as a whole. But so, as a standalone value, electricity up, you know, 6.5%. Right. So you better get some solar panels. Get some solar panels, right? Get those little matter of fact, there's a couple of companies out there. Matter of fact, hey, all y'all people out there in the sponsor world, you know, I'm not a crazy big channel, right? Got a few thousand subscribers, but you know, I believe in off the grid kind of little things like that. So you want to, you know, I'll speak about your little, you know, your little Generac or your little, your little solar panel, you know, energy harvesters, machines. Hey, hit me up, right? Hit me up because that stuff is great. I'm saying it because you need to keep that stuff in your trunk. And I always tell people, especially if you move around a little bit, you know, that's the way you need to start being more protective of yourself. Get you one of those solar panel little machines, right? The panels and the little, you know, the machine itself that harvests the energy. And so if you out in the middle somewhere, something go crazy, guess what? You got a way to still keep your little items powered up, right? You can still keep yourself powered up, especially if you low on gas, right? You can't sit there and run your gas all day burning gas, you know, especially in that. You pull that little thing out your little trunk, get all the free power you want from the sun. See, we gotta start thinking like that. I know people like, man, come on, bro. I don't need all. How you don't? How? Right? How? Right? But anyway, moving on. So inflation is serious. Inflation is kicking everybody in the teeth. You can't escape it. You can't say it's not real. It is very, very real. Right? A 12-month percentage change in consumer price index. How much inflation is impacting your purchasing power? How much in inflation is impacting your purchasing power? Here's a look at increases in key categories in the past year. Look at those prices. Oh, but it's transitory. They say it's transitory. They said, notice I said they said that it's transitory. It's transitory, guys. Right? Like, seriously? It's transitory. Don't look like it's transitory to me. Because we're a year in, a year end, right? And it ain't getting, you know, any better. It has only gotten worse. So how's it transitory? Well, again, like I said, they can overshoot their scenario and still be bailed out on the back end by saying that, you know, we had to overcome it because we didn't know the severity of the situation dealing with COVID. See, that's the excuse. But again, at that point, the money is already made. Wealthy people have already gotten wealthy off the free spigot of the Federal Reserve just printing money, right? They just in the background, right? And they just like this right here, right? People like Nancy Pelosi, her and her husband, and many others, they're sitting in the background while they're trying to act like they care about people who are suffering right now. They're in the background of that, behind the Federal Reserve, with Jerome Powell and Janet Yellen. They outside in the Federal Reserve saying push, right? Pump them dollars into the system because I got stock options in the Apple and Tesla. I need the stock to go higher. See, that's what hedge funds are doing right now. That's what JP Morgan and Morgan Stanley's and all that. They like push it, pump more money. We don't care if the economy overheating for Main Street and they suffering. We don't care about automobiles, used cars being up near 30, near 40%. Gas is up dang near 70%. Push it higher. Because their short-term profits succeed that of your real-time needs. They can care less. They just let it push it. Push it. They have no chill. And they don't have no heart. Right? If you think they do, yeah, good luck. Because then that's why I say you got to remove yourself from being emotionally invested in people who really don't demonstrate their philanthropy. That's more to talk about, they care about things. No, actions speak louder than words. Still, at the end of the day, the name of the game, action do speak louder than words. Simple. Inflation is serious, right? And you have to be, sharp about learning how to invest in or around those spaces because everything is not a free fall, right? This is not a body dip, union over here. We don't do that, just body dip on anything, right? There's some YouTube channels do that, shots fired. I'm going to say that now. I have to start saying that. Some of the YouTube channels are very, very vicious, right, at that. And I think it's irresponsible because everything doesn't warrant that reality only because they've benefited from a stint where we know that the floodgates were wide open. That stuff, it's not going to always be there. So yeah, inflation heat is serious out here and it's not backing off the way that they want it to. Right? Again, so much so that guess what? I wrote another song for y'all, produced it, mastered it and everything. I'm gonna share it with y'all right now. Wrote a song about it, like hit go.
Yeah. Ow! Yeah. Y'all think too small, I got big dreams. You just starting, I'm way ahead at the end scenes. Started reading and dodging all of the quick schemes. Money like your Spotify, boy, I got 10 streams. And I'm still looking for more. My people, they got a soar. I'm putting that on the Lord. Ain't accepting ignore, just kicking down all the doors. Guarantee you, boy, if I ask for it, it's gotta be real big. I gotta make it just for my kids and for their kids' kids. That's wealth years and years. Promise brother, soon as he out and finish this bid, we finna do it bigger than anybody ever did. The odds is real big. Job that's real big. Satan trying a little, my God is real big. Stayed up on the ground and the cards is real big. I gotta do it big, the only way that I can live. And I promise I'm trying to. Before you count me out, homie, let me remind you. They was blocking the shine, now I think it's my time to. Counting them dollar signs like lights, they'll blind you. Let me rewind to. Back when I was broke and I couldn't acquire 2 cents. And now I got 2 rents. They was sleeping on me, homie, must have got too big. Call my phone, I be like, who this? Damn right, hell yeah, I'm brand new. Smell like can too. I'm fresh forever like canned food. Try and tell me what I can't do. I wanna see the world, my vision on Shamu. That mean I got goals that's real big, foes that's real big. Your offer too little, sorry, my soul is real big. Coming into the ring with blows that's real big. I gotta do it big, that's the only way I can live. I gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big, that's the only way to live. Gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big. That's the only way to live. Come on. Yeah, come on.
See, the market's always going to do it big. Wall Street will go out of its way to show you how big they will do things just to prove to you that they're not concerned with what happens, in your little world, because they're only concerned with what they're getting from, again, by way of your tax dollars. You're fueling their euphoria and you're not participating in it. I repeat, you're fueling their euphoria with or without your consent, and you're not even participating in it. Let that marinate for a moment. What's going on, family? Peace, smooth. I see a lot of shots being fired. That's it, right? Sometimes we gotta, make sure we on the on the straight and narrow, and it requires that sometimes because people out there will again get you all, you know how it is. Y'all know how it is out there. So again, protect yourself. Protect yourself financially, guys. Uh, you know, again, it's okay to to take chances too, right? Again, understand your risk management value within that mitigating your risk, but go out there and figure out how to better grow your situation. Don't fall into diverse temptation. Figure out how much you're gonna liquidate. Don't convince yourself that it's only two or $3 or $4. It's not that much. Learn how to put that money into some kind of form of an asset, appreciating asset. Get used to doing that to the point where it don't feel like you pulling teeth to put your money to work for you, right? Do it methodically. Do it with research first. Do your research first, of course. Hang out on channels like this and many others that really give you good insight, right? Figure out how to put that money to work. 2 here, 3 here, 4 here, 5 here. It adds up. Trust me. If you did this principle-based investing alone in terms of just learning how to do what they call aggressive saving, to get used to training your mind to be a good saver, right? Well, you can put away at least $5 a day in a shoebox, right? $5 a day in a shoebox, right? It's $35 at the end of the week, right? $35 at the end of the week, right? Think about that, right? 35, right? At the end of the week times 4. And then that times what? 12. Let that marinate. That's what they call learning how to do, discipline principle-based savings. Now, at the end of the year, you have a lump sum of money. Well, all you did was just paid yourself or paid it forward, right? You paid yourself in advance, right? You can now take that surplus or that capital, right? That principle-based investing, right? Again, you're just doing $5 a day, right? $5 a day, right? Which equates to $35 at the end of the year, right? Excuse me, at the end of the week. I mean, you can do it all in one lump sum at the end of the week, or you could do it day to day, aggressively $5 a day, right? You again, time 4 out of a month, right? Right? That's $140, right? Every month you have now in terms of acquisition power, investment power, right? Either way, right? Or at some kind of form of an escrow. Now, again, 12 months in a year, right? 12 months in a year, right? That puts you at around what? $1,680 at the end of the year. Just putting away $5 a day. $1,680. Let that marinate. It's people will fight against something like that. Man, I can't do all that. Man, that's too much. That's too much work. What? Again, it's a mindset. You're trying to create a culture. You're trying to create a new social dynamic in your existence in terms of how to be a little bit more fiduciary responsible. So yeah, it's a practice that you maybe need to put into play to get used to learn how to, bank money as opposed to what, spend money. See, it's about creating good habits. $5 a day, $35 in the week, $1.40 at the end of the month. $1,680 at the end of the year. Some of y'all that'll pay for some of y'all little holiday spree. Some of y'all, especially if you don't celebrate holidays like that anyway, right? Now you got investment money at the end of the year, and it didn't hurt you to come up with it all at the end of one cycle, like on the holiday shopping spree. That's your money now that you got to be able to pay into your family functions that you might want to have a family get together. You ain't struggling and straining to just produce that money all of a sudden. That's good habits, right? People will look at that like, man, but yeah, that's no, trust me. You bypass Wendy's, Taco Bell, and you stop on the way home and know you got food at the house, and you didn't spend $5 on a $5 fill-up box at the KFC, and you could, you got food at the house. You could have saved that five would have went into your shoebox, and now that's building towards that 1680 at the end of the year. That's one person. Mind you, that's one person doing $5 a day. Well, guess what? If you have a spouse at home, even if you want to get your kids involved, guess what? You get them involved too. If your spouse put in 5 too, guess what? Now, look, now you're really getting it, right? Now you really got a little, little something strange for a little piece of change, right? You got a little something strange for a little piece of change, right? That's $35, right? Oh, I did math wrong. Excuse me, it's 1820. I did my math wrong, my bad. I was trying to do that number in my head. It's 1820. 1820. Let me put that in the back chat so y'all can follow me. It's 1820, right? And I did this so much, so I should have known. I just went over my head. I'm thinking about too many numbers, too many stocks. It's 1820 at the end of the year for $5 a day. If you have a spouse at home as well, and they decide to put in five, him or her, right? Him or her, right? Whatever, right? Now you're putting down, obviously, in a form of paying yourself, first, or paying it forward. That's like $3,600, right? That's $3,600, right? $3,600. Let that marinate. So 3640, somewhere around there, right? Give or take. That's with two spouses, right? Basically, husband, wife, whatever that new stuff out there today, right? Two people. I'm just gonna say two people in the household, right? Two people in the household putting away $5 a day, right? That's 3640. What can y'all do with 3640 at the end of the year? I'm asking, right? What could y'all do with 3640 at the end of the year? If y'all figure out a way to be more conscious and discipline saving and really put forth that initiative to do this, because what you're going to do, you're going to learn a lot about your situation and yourself by being able to do it. It's teaching you how to be more conscious and disciplined, right? Now, again, and if you got kids, right, so they can pitch in $1 or $2, right? Well, so you put them on a $2 allowance, right, at the end of the week, or a $2 allowance, right? You're going to work for it, right? You throw in a little kicker, right? And now you got, you up near like $4,000, somewhere around there, $4,000 and change. All that became on the back end of y'all paying it forward, escrowing your life. It's kind of like escrowing, escrow your investment, right? Escrow your investment thesis, so to speak, right? You escrow your investment thesis, right? Over Chris putting the back chat, 100% right. That's a whole share of Amazon right now. A whole share. That's a whole share of Amazon right now. 7 to 8 shares of the S&P 500, right? If you like Nike, that's what about what? How much is that for Nike? About 20 some odd shares, somewhere around there, give or take, somewhere around there, right? 3 shares of Tesla. See, people convince you they're convinced you they ain't got no money to get invested. Now you can even buy a fractional share. That's what's so crazy about it. Even in an inflationary environment what we're dealing with right now, you can buy fractional shares of these companies. Fractional, meaning you could put $1 on it, $2 on it. Same way you do at the gas pump. Ain't no gas in that car. That's what you be saying. You pull up and they get them $2 worth of gas. Well, guess what? Them $2 in your shoebox go a long way, because at some point when it culminates to a year-end review of that, now that's buying power you got for the next year to invest in the stock. Matter of fact, you should start a custodial account. If you got kids, you should start a custodial account and do just that. That's another way to 529 plan their life ahead of their life, to get them excited about understanding the power of what you're doing and doing that. So you can explain it to them why you're putting that money in that shoebox. Eventually it goes out of that shoebox and goes into a custodial brokerage account. And so guess what? That same amount you was doing in the shoebox goes into that custodial account going forward. And you can mix that investment count up with a different plethora of different, investment theses or stocks or ETFs, and then just continues to keep adding to it. Now imagine you did that over 18 years. I rest my case, Your Honor. Does that have more potential to outbeat a 529 plan like that, as opposed to just doing this whole, base case 529 plan with potentially low yield? It's straight for good, for us a low beta value and less risk, but you're dealing with aggressive market that can produce you at least. If you just say, if the market would give me a minimum of 5%, that's undercutting some of these major ETFs. A 5% annual kicker on a $3,600 or $44,000, saving, right? That you put forth for an investment thesis in a shoebox. What's 5% of 4,000? Anybody? What's 5% of 4,000? Anybody? Put it in the back chat when you get the answer. YouTube, Twitter side. Put it in the comment section. What is 5% of 4,000? Anybody? Anybody? Real quick. Give me 5% of 4,000. Somebody put that answer. Either on YouTube, Twitter, or in the YouTube. What's 5% of 4,000? 5% of 4,000. Somebody give me 5% of 4,000. Anybody? What's 5% of 4,000? We know 5 plus 4 obviously is 20, right? So I just need to make sure that zero value is right. So what's 5% of 4,000? All right, somebody, family already on it, right? YouTube popping up. I see YouTube banging. While y'all at Facebook and Twitter, right? Everybody YouTube popping them numbers out, right? That's $200. That's $200. A 5% kicker. Now I'm gonna ask this question, being 100%, based upon how banks are set up right now, even with the money market account being basically garbage because interest rates are at zero, and the Fed is not going to raise rates in entirety of that of what, a quarter basis point over 6 times over the next 3 years. Essentially, it's a slow walk to raise interest rate. Even at that point, money market account still not going to be able to rebound like they was way back in the heyday of surplus because the economy is still weak. So again, how can a money market account beat a 5% kicker in an investment vehicle? Anybody? Show me a money market account that's paying 5%, for average user, not a person that has to have at least 100,000 or a $250,000 or $500,000 in their account, and then they may try to throw them a little extra perk. But the average American that can't get that kind of yield, even when they're dealing with the treasury rates, as they are, how can a money market account beat a 5% yield? Anybody? I mean, if you had $4,000 in your account at the beginning of the year, and right now at the end of the year, in your money market account, how much interest you think that money market account accrued on them 4,000? 5%? Man, get out of here. I got a gun right now to sell to you right now that shoot laser bullets, through concrete, metal, steel, all that. Yeah. 5%. You're not going to beat that. Okay. All right. Well, look here. Now, people say, well, how can the market remain doing that? And because it already went like it went through the moon, bro. You ain't no more money out in the market. Bruh. Let me help you out with that. Matter of fact, I'm using the one that I have on my screen. Bitcoin, look what Bitcoin did. Beginning of 2020, 2021 in Bitcoin was at 29,000, basically 30,000. Bitcoin went up, obviously, it went up another 70,000, right? Right now it's up 46,000. Right? It's up 46,000, right? That's well over what? Right? You see what I'm saying? Well over 10%, right? Right? Well over 10+%, right? I'm using that as a minimum. I'm being minimalistic here. Don't come for me. 30,000 to where we at now, 46,000. That's over 10%, right? 10% of 30,000 is what? 3,000, right? Another 3,000 is what? 36,000, right? Another 10% is what? 39,000, right? You see where I'm going with it? Another 10% is what? 42,000, right? Another 10% is what? 45,000, right? You see how that work? That's already around about what? 70, 80%? So Bitcoin up 70, 80% off its beginning of the year value. And your $4,000 in Bitcoin now, 80% of 4,000. What's 80% of 4,000? Anybody? What is 80% of 4,000? 80% of 4,000. We know 8 times 4 is what? 32, right? So if 8 times 4 is 32, how many other zeros you got to put behind that on an 80%, 80 percentile? On an 80 percentile rolling scale, what's that? That's $3,200. That's $3,200. Again, what money market account right now paying you 80% on your money sitting in there right now? Heck, is your 401k giving you 80% right now? Shots fired. What the heck? Is your 401k giving you 80% right now? People like, oh, bro, but I'm scared. All right, move on, bro. I know one of my partners personally, ATL trader, took his and took that thing over $1 million. He's like, why I'm sitting there? All right, I'll leave that alone. Moving on. Look, 80% on $4,000 produced $3,200. And the year ain't even over with yet. It's just December the 18th. These jokers don't want to deal with that. They just want you to say, to the moon. All right, and it sounds good. Then when you leave them, then they be like, no, I can't do that stuff, bro. I can't invest in that stuff, bro. I can't do it. I can't do it. Like, no, they rather go risk, silly stuff. They're gonna go risk it all on silly stuff, trivial stuff, make excuses for stuff. And these wealthy people like, man, we don't care. We finna drain these people pocket for all they got. They try again. They finna do away with the middle class. Eventually, it's gonna either be poor or people who are wealthy. They already setting that rule, but look, all right, okay. Keep acting like you got time. Keep playing the turn up game. Keep trying to be turning up and distracting yourself and keep playing. These people got no chill. You saw what they did with all that money that came from the Federal Reserve because of COVID. And they sitting there knowing people ain't sitting there putting together plans like this. They know most people who are not, familiar with this or not even, look, they're not excited about it. Why? Because, they favorite bowl game on and no shots fired, but shots fired. They favorite NBA game on, whatever. Long as they in the Coliseum, that's how they get you. Long as you stay, inebriated inside of the Coliseum life, right? All that stuff, social media, the whole reality within, reality TV, all that stuff. Long as you stay in the Coliseum, inside the Parthenon, right? They in your house robbing it right now. You in there cheering on, whatever, getting emotionally connected to nothing, and they're inside your house robbing it right now. Inflation and everything else, and you convinced that 5% ain't nothing to you. You convinced 3% ain't nothing to you. Here it is again, Bitcoin up 80, and that's at the beginning of the year. So 4,000 now worth $3,200 in profit. Now altogether that's $7,200. Man, look, how else y'all want me to do this? Right? How else you want to do this? We can go back as far as 2020 when COVID hit. It's the same reality. We can go back even before that. It's the same reality. We can keep doing this, right? I would tell people, man, we can do this all day. At the end of the day, you have to realize that you're gonna have to start getting more, conscious about this because they're figuring out more and more ways to separate you from your money and more and more ways where they can take and build their money up. We can keep going back. So people like, man, Bitcoin crash. It's dead. It's going to zero. Look, 2016. Couldn't even put it on the screen. 2017, blow up, pull back, consolidation, cup and handle pattern, ramp, go higher, consolidate again, going through the same thing all over again. Wash, rinse, repeat. So where within this chart algorithm here, this logarithmic move here, where it went to zero? Anybody? Bro, but here it went to like 20,000 and pulled all the way back to 3,000. Okay. So you bought it, 11,000, you bought it 10, you bought it 15, and you bought way up here 18,000 and went to 19, 20. And you still probably like, okay, yeah, you can pay yourself along the way. You ain't got to sit through all it. And you can sit through all it because you still believe in the long-term thesis of an investment. That's the whole ideal of it, is to teach you patience, understanding. Yeah, no one like to see an asset go to 20,000 all the way back to 3,000. But in that perspective, where it came from before it went to 20,000 is more monumental than when it fell from 20,000 back to 3,000. Why? Because it launched from what? 600, 1,000, and went to 20,000. Even if it pulled back to 3,000, you still up what? 200%. Right? You still up 200 to 300%. See, that's the part people get misallocated, and they hear other people telling them that, convince them, no, this is why you shouldn't invest because this and this that. See, they don't understand how to put together thesis, right? Because they feel like it's work to understand the value of assets or the value that is being kind of speculative in the nature until you can understand more about the mainframe of the asset itself, the use case, utilitarian value, any of that stuff. See, you're gonna grow and learn a lot about this stuff by being in it or around it. You realize at the end of the day, a lot of stuff that they talking is a whole lot of what, just It's just a whole lot of fear, right? They call it FUD, fear, uncertainty, doubt. You got to look at the long-term charts. So I always say numbers don't lie, because I always say go back and look at the bigger picture, right? Literally 3-4 years ago, where was the asset? Where was the asset 3 or 4 years ago? Okay, my bad. Oh, it was down here at $1,000 a token. Oh, okay. Oh, it was down here at $500 a token. Okay. Okay. And then it went to 70,000. Okay. My money market account went to zero, literally. But this little asset here went from this to that. Okay. This must be some trickery here. This some sorcery, right? It's a scam, right? It's a scam. Scam bird. Scam. It's a scam. See, it's an excuse for everything, guys. There's an excuse for everything, right? There's an excuse for everything, right? Except putting in the work to learn, so then you can make a more intelligent, educated decision whether you for or you against, because it's not a personal thing. It's about, how can I find value? How can I grow yield? How can I understand the markets? How can I read inflationary data better? Right? How can I become more abreast of what's going on in and around me, so I don't feel like, I'm waiting for the news to tell me what's going on when I could be ahead of the news, because the news is always going to have a slanted view, because they got sponsors and people who cut their checks, and they are also being told, hey, if that information going to hurt their scenario a little bit, hey, don't be too brutal on the news about this topic. Okay, we eat off this. We have a publicly traded stock out there. Just put it out there, but don't go too crazy on it, right? Sound dovish as possible. See how that works? Right? You see how that works? Inflation is at a 39-year high, and people in the media have you thinking like, oh, this is not as bad as they said it is. This is good. Right? This is good, right? Yeah, this is nice, right? This is good. This is nice. Okay. Okay. See, they will have you believe anything if you're not initiated. If you're not initiated, they'll have you believe in anything. So you have to be responsible for your own information to a degree, right? It's the same with everything about the jab, all that news about all that stuff, man. Look, all right. We're gonna do a 7 on that. It's about time. We need to crank that one back up. We did a lot of it during 2020. It's time to crank some of that stuff back up, because some of this stuff is getting out of whack. It's out of control. Inflation, right? What is driving the U.S. inflation, right? 39-year high. The reason and solutions are complicated, right? Oh, it's complicated. See how that works? It's complicated. Well, anything that has supposed to be very transparent should not be complicated. I repeat, anything that's supposed to be transparent should not be complicated. Let that marinate for a moment. If your life, is centered around a lot of things that are transparent, it should not be complicated. If you live a very, open, straightforward life, transparent life, you're not complicated, right? This stuff is simple to that regard. People don't want to deal with that, though. I get it, right? I get it, right? They're trying to, hide behind the facade that this, and this, that, they this, they that, like whatever, man. Like seriously, in this day and age, people ain't got time to waste. Either be serious or be, kick rocks, right? Beat feet. This is the reality, because the government coming, investment bankers are coming, right? These viruses are coming, right? You better figure out what's right, what's good, what's solid. Get your good circles and try to build something, right? Because a lot of this stuff really is getting out of whack. It's getting crazy out here. So again, they're gonna tell you one thing in the media, and the reality of the organic data are gonna tell you something different. So what is driving U.S. inflation to a 39-year high? Again, 39 years, the last time high inflation been at these levels. That was way back in the 70s, dang near, right? Couldn't make this stuff up. How the U.S. find itself staring down the highest inflation rate since 1990? It starts with the pandemic, right? Our attempt to stave off the recession and COVID-19 ripple effect around the globe. Okay, all right, here they go. Right, so worry about inflation here, what to expect and what you can do to protect yourself, right? So a few different things, right? Grocery bill grabs, right? The headlines, but inflation impact is more pronounced. and other areas, right? Just some of the highlights. The average price of a car in the U.S. is nearly up 19% from a year ago, when it broke 36,000. Right? Look at that. The cost of getting goods here have skyrocketed too, with shipping container costs up tenfold, not twofold, threefold, tenfold. So it's serious out here. So what is, with the inflation at 39-year high, Americans are feeling the pinch in just about every facet of daily life. The consumer price index jumped 6.8% from a year earlier. 6.8%. That's a lot. People maybe not understand the magnitude of that. That's a lot. The fastest pace since 1982. There you go. How many of y'all were born in 1982? 1981, 1980, 1982, 1983. Some of y'all just been born, and we going back to them levels. Right? As prices surge from staples such as food and gasoline, as well as new and used cars, rent, and medical care, the Labor Department said Friday. Basically, these numbers just going out of whack. They're out of whack. There's been plenty of finger pointing from both sides of the political aisle, right, about who's responsible for the spiraling costs. But as usual, with issues that have such a broad impact, that causes the causes are complex, right? So it's always complex. Well, ultimately, we realized that one person been lying and everybody else been kind of kicking that can down the road because it has benefited them from their stock portfolio investment. And the culprit in the room has always been, I repeat, the culprit in the room has always been one guy and one guy alone, right? And we know who that guy is, right? Because again, the scapegoat is blaming on everybody else, but the culprit in the room has always been the guy that's printing all the money, who's causing it, who's diluting the dollar, and got everybody else out there just kind of struggling, right? We know that. It's this guy. That dude right there. Mr. Transitory himself. Right? But people want to deal with that. Some people don't want to deal with that, and that's fine, because the numbers don't lie. The data don't lie. Right? But moving on. So, again, the president pretty much acknowledged that last month the inflation hurts American pocketbooks, and reversing this trend is top priority for me. Seriously? The guy that caused the problem, they re-elected him to fix the problem. If he don't fix the problem, they're going to say, well, it's because under the previous president, he exacerbated the issue even more, and that's why it's not my fault, but it was more so his fault? Or they're going to blame it on supply chain issue? I don't know what they're doing. They they trying everything to see what stick. But he said his $1 trillion infrastructure package, including spending on roads, bridges, and ports, will help ease supply bottlenecks. Majority of those things to get done cost what? Cost money, right? And the products that they're going to need to service those roads, bridges, and ports cost even more money right now because of inflation. So how him fixing those things in the interim of that, the idea that the inflation is already up, going to obviously better inflation. But inflation is already out of control is the point. It's already out of control. That's that kind of stuff. That conversation or soundbite that comes after the fact. Right when it's starting to kind of rear itself. This is how we're going to fix it before this get out of control. No, but it's already out of control. The genie's out the bag, right? The cat's out the bag, whatever. This is the silliness that they put out in these articles. Here's a quick breakdown of how we can, get here, how we got here, and some of the strategies that might help reverse the trend. Good, I'm all over the place a little bit. Help reverse the trend, right? So let's go to the little commentary within the video here, so we can kind of get the picturesque version.
Is on the right.
All right, the picturesque version, right? Because it's easy to.
When inflation is on the rise, it's not always as bad as it sounds. Here's how it works and what you can do to protect your money.
Not as bad as it sounds.
Inflation is the rate at which the price of goods and services increases over time. As prices go up, the purchasing power of your money goes down. This is something that's been going on for decades, and a lot of things can affect the rate of inflation. But one way the government controls it is by adjusting interest rates. Interest rate is the amount you get charged when you borrow money. Usually, inflation and interest rates have an inverse relationship. For example, during the pandemic, the government kept interest rates low to make it easier to borrow money, which stimulated the economy, but that led to higher inflation.
Many economists have actually argued that the leap in prices that we've seen recently is a byproduct of the economy reopening, and it should abate by next year. Still, even before the pandemic had happened, inflation over the past decade has remained largely muted. And that's really due to the fact that things like tech innovation, globalization, and increased productivity are all still firmly in play. And experts say that that should help keep inflation in check this year and for the foreseeable future.
Inflation affects the prices of everything from your food to your house to the amount you have to pay in taxes.
For March to April, we saw an increase in car prices, airline fares, hotel rates, car rental prices, admissions to sporting events. All of those rose on a monthly basis.
Higher inflation also impacts the stock market, but there are things you can do to protect yourself.
Experts suggest that you end up sticking with stocks. So things like materials and energy, those tend to benefit from higher commodity prices.
I'm sorry, what did she say? Stick with stocks. Just learn how to be more what? Methodical in your stock search and seizure. We've already covered it. I talked about materials. We talked about energy stocks. We've been doing this, of course, last year. But, just to reiterate that, next year is going to be that moment where you have to be a little bit more thorough. Meaning you have to kind of, really put in some work and find these opportunities, right? So, yeah, this is the time to get serious, right? This is the time to get serious, right? So just want to put that out there.
These real estate investment trusts have also offered attractive returns. And so things like
when inflation is on the rise, it's not always as bad as it sounds. Here's how it works and what you can do to protect your money. Inflation is the rate at which the price of goods and services increases over time. As prices go up, the purchasing power of your money goes down. This is something that's been going on for decades, and a lot of things can affect the rate of inflation. But one way the government controls it is by adjusting interest rates. Interest rate is the
adjusting interest rates. So when inflation rears itself, typically in that moment, the Federal Reserve is supposed to raise rates if you're already at a low, to zero, basically at zero or sub-zero interest rate levels to deal with a pandemic or a catastrophe of this nature. You start raising them, which causes obviously, people to not borrow so much money at cheaper rates. They become a little more frugal in their credit perspective, right? And because of that, they're more cost conscious about how and where they spend their money and how, what values of money they spend, which in essence, cost the goods and services, to balance out a little bit, right? Because now people are being more selective, right? They're more productive heavy than just free for all spending, like it's a spending spree, and which obviously in this case that helps lower the value of the inflation, right? Supposedly, right? But that's typically the form of how that works, right? So if the Feds are not wanting to raise interest rates and it's this bad and it got worse over time because it didn't get better, it got worse over the times when they kept saying it's going to get better. They only exacerbated the issue by printing more money, and they still haven't gotten that point, and they still want to print up to at least up into March before they stop the tapering in the quantitative ease in QE4 before they start thinking about doing liftoff in that case and start raising interest rates around about the summer of 2022. These people are maniacs. They are wild beast savages because they know at the end of the day, like I've said this many times, once that money is already printed and sent down range, they can't resend it back. They can't redact it. They can't retrace it. Once it's sent, it's gone. IRS can come get money when they overpay you. Your boss can come take money out of your paycheck if they overpay you. Any kind of clearinghouse can come take money back if they overpaid you. But the Federal Reserve, when they print money and send it down range to the stock market, to the investment banks put it into the stock market, once that money is gone down range, it's a free for all. They can't rescind it back. See how that works? So they could be wrong in a thesis, even though they thought they was right and make a bigger mess than they wanted to, but yet the people who benefit from it, which is the wealthy, they've already what? Locked in those gains. That money's already what? Gone. See how that works? It's a hustle, but people don't want to deal with that. They feel like, no, the government got my back. They wouldn't do anything to mess us up. I'm like, man, I'm like, please, Elon, let me get one of them seats on the way to Mars, bro. Look, you take food stamps. What you take, Elon? I got you, bro. Just let me be on the first flight up out of here, because I can't deal with it, right? I can't deal with it. I can't deal, right? Anyway.
The amount you get charged when you borrow money. Usually, inflation and interest rates have an inverse relationship. For example, during the pandemic, the government kept interest rates low to make it easier to borrow money, which stimulated the economy, but that led to higher inflation.
Many economists have actually argued that the leap in prices that we've seen recently is a byproduct of the economy reopening, and it should abate by next year. Still, even before the pandemic had happened, inflation over the past decade has remained largely muted. And that's really due to the fact that things like tech innovation, globalization, and increased productivity are all still firmly in play. And experts say that that should help keep inflation in check this year and for the foreseeable future.
Inflation affects the prices of everything from your food to your house to the amount you have to pay in taxes.
For March to April, we saw an increase in car prices, airline fares, hotel rates, car rental prices, admissions to sporting events. All those rose on a monthly basis.
Higher inflation also impacts the stock market, but there are things you can do to protect yourself.
Experts suggest that you end up sticking with stocks, so things like materials and energy.
Materials and energy, just a few of many out there, but hint, hint, wink, wink.
Those tend to benefit from higher commodity prices. Real estate investment trusts have also offered attractive returns in prior periods of rising inflation.
So, again, the people, that know what's going on, who are initiated within this realm, they already know how to shift, income shift. They already know how to diversify shift. They already know how to rebalance. It's no different from you all, right? And I say this because I'm finna make this analogous, right? It's like when football season is over with, meaning the NFL, right? When the NFL season is over with, what kicks in, right? Hold on, I'm sorry. What kicks in, right? Basketball season, right? You come right out of, football season, you go right into what? Right into basically basketball season. It's it's an ongoing presence of, again, keeping people, in front of their TV or entertained or whatever the case, generating ad revenue, the commercials, the pageantry of it, the whole value of it. See how that go? It's just a constant, and it gets you amped up and fired up. You come out of one season to next, you spending money. Oh, I bought paraphernalia for this, my team on this side, or my two team, right in the NBA. Oh, I got to go buy me some, new this for that for my team and this. See, again, it's no one's getting fired to do that with a stock picking though, or they stock investment. Are we coming out of this cyclical season? Are we finna go into that season? Oh, we dealing with inflation, so I need to be more prudent in understanding how to income shift to more materials and energy or stocks that are more inflationary head proof. Oh, let me get ready for that. See, that's a whole new different game plan. It's a whole new different ball game. See, this is what makes us different, right? This is what makes us different. Because we plan for that. We plan for that and we plan for that. We're playing for that and we plan for that. That's what makes us different. That's what makes you guys different. This is what's gonna see in the future. This is why people ain't gonna be able to touch y'all. This is what's gonna separate a lot of you all from a lot of y'all peers. Not in a bad way, but it's just that you building that house for what? For a catastrophe. You're building your house up for a catastrophe. meaning your back end, right? You're petrifying your walls, you fortifying your walls, you got good materials, right? You're not doing the wet tissue house challenge, t-shirt moment. You're not doing the wet tissue house challenge. You know, just acting like, you know, there ain't a care in the world, it's all good. You know, party, turn up. You're not doing the wet tissue house challenge. You're doing the fortification house challenge, the steel house challenge, right? You're doing, you know, solid stone, right? Right? You know, solid stone house challenge, a difference. Right? So, yeah, commended. Right? It's to be commended, right? What you're doing now is definitely going to benefit you in the future. Again, you know, these prices of goods and services are up. People planning for a holiday. That's why the retail sales numbers that came out the past week, that's why they were low. You're in the middle of a holiday shopping spree cycle, supposedly, but we know it's different because of the whole COVID stuff. But the retail sale numbers are definitely what? Deadened. Why? Because people, you know, have gotten used to, number one, shopping online because of the pandemic, kind of, you know, trained them to do so. And then the fact that, again, you know, the cheap money aspect of that now is starting to kind of wane a little bit. The stimulus checks are dried up. The moratoriums are over. You're not getting free rent now. You're not getting free mortgage payments. You don't have to worry about, you know, those things. You got to worry about them now. Energy costs are up. Gas prices are up. Right? To keep your house a little bit more safe, especially with your kids out and about. You got kids and they're going to school. You got to be more conscious of that. So you got to spend on things to keep your house safer. That's up. See, the best you could do is just hanging out with people on Christmas. That's even deadly now because you got an Omicron and a Delta surge virus starting to happen right now. So seriously. So how's the economy booming when all those kind of things are out there? Now, there's aspects of the economy that are better than it was before. Again, they used the base fit. Things always look bigger from the ground up. See how that works? It looks like it's larger than life when you measure it from the ground up. So people ain't getting new jobs. They just returning back to work. So how you going to say that's a good, we having what, job creation? You're not creating a job if people went back to the same job they had before they got laid off because of COVID. See, that's, all right. Breathe, brother, breathe, brother. Right? Christmas shopping hit by higher prices due to inflation. How many people running to go out there, to go buy all these expensive items, and they already, scraping a little bit because of, work and all this stuff. But Christmas is not going to be all that. Look, Christmas shopping hit by higher prices due to inflation. Online shopping has also been hit by inflation. So everybody says also been hit because they know that's the main portal people have been using lately is online shopping. On Thursday, Adobe, right? Y'all know about Adobe, right? Adobe, right? PDF artist, Adobe, photo audit. Adobe announced online inflation data for November, which it said reached a record high of 3.5% year over year, which is the largest increase since Adobe began tracking the digital economy in 2014. It also, the 18th consecutive month of online inflation, meaning they've been ramping the prices up little bit by 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 little bit on all the goods and services online. This before inflation became even a major issue that it is now. These companies online began to update prices because they know everybody was driven to their sources for that because they had to. So they was already price gouging customers already. Let that marinate for a moment. They were already price gouging you before inflation became an issue what it is today. See how that worked? Couldn't make this stuff up. Record profits, right? Record profits. Record profits. Billionaires becoming richer. Millionaires becoming richer. 100,000 becoming richer. And people out there like, oh, I got time to turn up, play around. The government got my back. They cut me a little stimulus check. I get me an iPhone, some shoes and a purse or something, and I'm good, some liquor, and I'm straight. This how come these people made dang near $1 trillion plus in profits. Slowly but surely, penny candy gouging you. And you like, no, I ain't gonna be conservative in the way I spend money. I'm straight. Okay. Okay. You're gonna learn today. You are going to learn today. right? So yeah, it's about time we get serious and realize exactly how we need to start partitioning our experiences to make sure we protect ourselves, right? Because inflation is not going away just anytime soon just because they say it is. They said it's going to go away in the springtime. They said it's going to go away in the summertime. They said it's going to go away in the fall time. Here it is in winter, and they still saying what? Well, okay, we'll retire the word transitory, but we think it's starting to peak now. Like, bro, how much peaking did you need? Kick the can down the road, lie, make it sound good, and again, a beautiful catastrophe. Quote unquote, a beautiful catastrophe. So prices were down 2% from October because of holiday discounts. Okay. Which were lower than last year. Vivek Pandyas, lead analyst of Adobe Digital Insights, right, said in an interview with USA Today. So these people already understand that this stuff is going to get, out of control. So yeah, you got a little break apparently in October, potentially that of Black Friday, if you want to say that, but then Christmas ain't gonna be that much more better because you're not gonna get the cheapest price you got doing a Black Friday or Cyber Monday. So yeah, and the prices are up more than it was even doing from that little time span to now. See how that worked? Goodness. We had the anticipated prices being higher for November because what we were seeing when we were tracking discounts on Cyber Monday and Black Friday was the discounts were weaker. See, I told y'all that. See, remember I told y'all that them discounts were weaker. They was not like we normally get. All they did was revert it back to the mean price, as opposed to thinking that you was getting a big discount. They tracked the price of inflation, and they say, okay, well, we have to pay more anyway because the cost to make these products are more expensive. So what we'll do, we'll lower the price of what it normally would be if it wasn't a Black Friday or Cyber Monday deal, and we'll make people think they're getting a discount because guess what? Inflation already got us up, an extra $200, an extra $300, extra $400 in some cases or whatever. And so people think they're getting a deal. Got him. I need that little meme now with better be like, got him, right? Right? I mean, he's doing it to make fun, but this is the reality, right? Got him. I'm going to use it right here. Use it. Right? I'm going to put that one out there then. Use it. Right? Use it or lose it. Right? As simple as that. Because these people out here serious, man. They serious, right? When it's all said and done, right? When you figure out how much they didn't gouge you and lied to you and went in your pockets, again, without your consent, you're going to be delighted right here. Man, they're going to have to keep a straight jacket on you to keep you from grabbing that hammer and going out there doing something, right? Right? You're going to go get the Draco, right? Let me go get the Draco, boy. They playing with me. I'm going to have to go get the Draco. See, it's serious out here, boy. Jokers don't want to deal with this, man. They want to play. Right? But that's why we do what we do. That's why we're a necessary thing over here. That's why we are necessary, right? Our little energy over here, what we do. This is why we're necessary, because we're unbiased and we coming straight down the middle, right? Because we know there's also moments of opportunity within this too, but we're gonna make sure we also outline all the other stuff too. We don't do echo chambers for a reason, right? We're not gonna force everybody to accept our way over here. We don't do that, right? We ask that you do your own research first and foremost. That's what makes you producer responsible for your own situation, regardless. So I love this because it eliminates that foolishness. It eliminates all that kind of foolishness, right? So you get down to the information, the data, then guess what? All that, kikiing and ha-ha and playing go out the window, right? So guess what? So again, they got you on Cyber Monday and they got you on Black Friday. I'm sorry to tell y'all that, but they got you, right? Not that, you still got what you wanted, but you end up paying a little more for it. Sapanian said, so adding discounts range between 5% to 25% lower than 10 to 30% last year. See how they got you? See, they slick. Tobit said she estimates the cost of her groceries are up about 50%. I repeat, Tobit said she estimates that the cost of her groceries are up by around 50% compared to earlier in the year. 50% more. So if you had a grocery bill basically around what, $500, now you're paying around about $750. $750. That's crazy, ain't it? God. All right. She said she plans on changing the budget along with food plans, right? Yeah, you got to see about your food plan. That's why I tell people, see, this is why you need to start buying more perishable items and start buying all that processed stuff that's more expensive anyway. on your gut and your pocketbook really at the end of the day, because you buy more because it's processed. You think it's cheaper because you can get more of it, but it hurts you more in the stomach, the gut, the bowel, right, and all that stuff. And then again, you know, ultimately in the end, you buy more, which ain't good. Rather than buying what you can know you can consume that's more perishable, you're gonna make sure you cook it and you're gonna eat it, right? In most cases, right? So tell me again, when I tell people when you eat a little bit more healthier, they think it's more expensive. It really isn't, because you buy more perishable goods, right? You buy your kale raw and your tomatoes and all that stuff and your salad stuff raw. And even if you eat meat, right? If you're a pescatarian, let's say you're a pescatarian, you're not a vegan or vegetarian, you're gonna buy meat that you know either gonna be frozen or you can buy it fresh. You know you're gonna have to cook it before it go bad, right? As opposed to that, you know, the fish sticks that you get from Hot Pockets or something, whatever that stuff, that's sitting in your freezer for about what 2 years because all the GMO and the carcinogens in it and it's radioactive. And you know, you all right, move on, brother. Move on, brother. Shots fired, shots fired. She's also changing Christmas for her family. She's also changing Christmas for her family. We will be simplifying our Christmas this year and refocusing on what the season is all about. Got it. Because you know what that means, right? Look, it ain't about the gifts. It ain't about all that, guys. Trust me, it's about the holiday. It's about the spirit of the holiday. See, then that's when you know it get really pseudo, because you know Christmas as a whole is just a whole bunch. It's a marketing propaganda day, right? Based on no historical fact. It's just all trash. I'm gonna call it what it is. I ain't gonna sit here and placate people, because people want you to be respectful with respectful to lies. That's the worst thing you can do. Respect the lie, right? Why would I want to respect the lie? Right? That's what mainstream media and people who control the dominant society want you to think. They tell you what? Respect the lie. Respect somebody's opinion to believe. Respect their belief. So when they come at you in a hard way about their belief, they want you to cower and respect the lie. They want you to respect fairy tale unicorns, you know, and flaming dragons and all that. See, I can't deal with people. I can't deal. I can't do it no more. I can't. Like nobody want to realize that, right? But they want you to blow money on this superficial holiday when you could be saving that money or investing that money that can give you a bigger return than an emotional high from a goofy present that's overpriced anyway because of inflation. See, that's just me though. Again, let me disclaimer. That's just me. That's where I get my hair done at. My mentality, individual, me. That's my mentality. I don't see the need to impress people. From that perspective, your love is the greatest commodity that you have. You know, that in itself gives you creativity. You know how to be more creative with your family, with people around you, so they respect you even more, right? They'll respect you even more when you can be the king or the queen of your castle and you can invent your own reality. You can invent your own holiday. You could do things that make your household stand out and be different for once and not fall and fold to all this social governance and goofiness out there where people just lying to you, telling that it's this and it's that and this. You wasting money trying to, again, support a lie. That's just my opinion. You're wasting money supporting that lie. And they hitting you with inflation. On top of that, that's even insult to injury. Ooh, boy. Ooh, boy. People don't want to deal with this. People don't want to deal with this. Again, they want to make it seem like it's this and it really isn't. All right. But anyway, moving on. So yeah, they're gonna have a white Christmas without presents under the tree, right? Basically, food is up 50%, presents, products up more than that in some place. Man, look, it's about the season. It's about the spirit. It's about the spirit. You don't need all that, you know, Xbox 39 and you know PS 68, whatever that stuff is. You know, I know shots fired, people to come from me now, but yeah, you don't need all that. It's about the spirit. But the spirit part of it is fake, though. Daddy already told me there ain't no real Santa Claus, Mama. That he said that him, you know, put them presents underneath there. But not you in a butt war, which got him. Now everybody standing around Christmas like they right here, like yeah, bro, yeah, but get your little nana, get your nana, and chill out. Right? Get your little banana and just chill out somewhere. Just chill out. Right? Them shots fired. I'm gonna cut up and stop cutting up. Let me get through this so we can get out of here. But seriously, guys, that's and look, this is why. This is why. I'm just saying this is why. Right? So y'all know what it is, right? I keep saying that. Y'all know what it is. And so let people tell y'all different. And don't let people guilt trip you in it and accepting, that mediocrity too. Because that's another problem. People want to placate, right? They don't want to be serious, right? Don't let them do it. Right? Ain't no more of that heartstring stuff because you got serious. I'm saying you got to start planning now. You're gonna have to really start planning for your future. Man, people think it's a joke. I'm really feeling the Three Little Pigs right now. I'm really feeling that Three Little Pig fable right now, right? There's some good principles in that. You revisit that, right? Because we know what it is, man. We know what it is. We know what they're doing. We already know, right? So, in knowing, so you gotta make sure you protect yourself. You're gonna have to protect your situation, right? Because they're not gonna do it for you, right? They're gonna continuously funnel you into the what? Into the meat grinder. They're gonna funnel your wallet into the meat grinder. See how that work? Because they know, you're easily manipulated and emotional when it comes to things like this. Why? Because you're gonna put, the fairy tale over your future. Because you're gonna say it's in a moment. We'll find a way. We'll find a way. See, they want you to stay in the realm of finding a way as opposed to knowing the way. See, that's the difference. Right? That's the difference. Right? They want you to stay in the perpetual of finding the way, the belief of it, as opposed to knowing which way you're going. Like you want to run around aimlessly in the dark financially when you can have a little bit more clarity knowing which way to go if you are. See that work? That's the difference. That's the difference. Right? So I'm like, if people, again, want to convince you that it's all, milk and cookies. Can I have some milk and cookies? Right? Rest of your AIP Bernie Mac, right? Right. And get some milk and cookies. No, you can get this stock investment. We can go invest in Mondelez stock that to make Oreo cookies and Ritz crackers, right? Well, let's go invest in Mondelez because it's number one, it's a consumer staple, and consumer staples actually do good during what? Inflationary periods. Why? Because the cost of goods to make those cookies and stuff go up. So therefore they got to charge more for those Oreo cookies that people can't do without. And therefore they're gonna spend money on those anyway, and they're gonna what? Cause the stock price to go up. See how that works? So yeah, you can get some milk and cookies, but we're gonna buy the stock version of milk and cookies. Right? That's the difference. Right? 1 second, this thing cycling out is acting, boy. See, that's what happens. You get the you get to doing that good, boy. This stuff get the popping and pinging. I'm finna fix that though, because I know what that is. A lot of that is it's peak hour of people being on the internet, right? 5 o'clock, 6 o'clock, 7 p.m. It's most time that the internet companies throttle down your bandwidth consumption because everybody's online and they try not to have a crash, which we have a lot of crash lately. I'm sure y'all been seeing that. Matter of fact, you can go to the website down tracker to track those things, which like what's going down, what sites are going down. If it's AWS, internet stuff like that, Amazon, whatever. But this is the time when most computers slow down internet value because again, everybody's on the throughput. So situations get the cycling and all that stuff like that. So you got to kind of lower other stuff around you to keep that from being a problem. Maybe reboot if you have to reboot. Of course, I can't because I'm in the middle of a live stream. But that's what causes that. So let me see it. Let me do this really quick. 1 second, guys. I'll be right back. 1 second. See if I can fix it. I know what this is too. It's also interference. All right, so hopefully this helps a little bit. All this interference happening right now during the downtime of the internet, right? Internet. So hopefully this works a little bit. So close off a couple things. And we're going to get back to rocking. So yeah, it's that kind of Christmas, right? So, and knowing so again, yeah, we're going to have to simplify. We're simplifying our Christmas a year. We focus on what the season is all about while making it fun, essentially, right? So there you go. So while everybody may be scrambling, next week, whatever, do what you do, I'll probably be online, speaking about stocks, right? Some investment ideas and, some things to look for. Yeah, that's my gift. That's my gift to society, right? I will be gifting out gifts next week. That kind of reality, right? This gives some people a gift that keeps on giving. Some good information, some knowledge that they could transfer into potentially some kind of form of a fiat currency gain, right? Or a crypto gain or a Forex gain. That's what we're going to be gifting. I employ all of you all. I employ each and every one of y'all to do the same thing, right? That's the gift you need to be giving your peers, your family members. You need to be, grabbing a nephew or a niece or, a kid or whomever, an elder person. Hey, let me show you a little bit, a little bit about, the market, right? Let me give you a little understanding about, what the crypto market really is. I know you've been getting a lot of misinformation on it, maybe something that's kind of confusing. Let me give you a little bit of that. That's what I want to give you this year for the holidays, right? Greatest gift ever gave, some gain. Greatest gift ever given is some good gain, right? How to better one's, situation. Make sense? So yeah, so you guys got something valuable. You guys have something valuable. Don't squander it. Build on it. Don't squander it. Right. So I'm popping and pinging really bad. So 1 second, I'm finna try to do something. It's gonna kick me out, but I'm gonna come back in. So y'all bear with me for 2 seconds, right? Because I had like a million screens open. I had old trading screens open from some of my other brokerages. So I had to close some of this stuff down because I know it pulls a lot. And again, this is the time of the day when the bandwidth consumption is very low because everybody's on the internet typically, right? At this hour. So they throttle down your services on cell phones and your Ethernet at your house to deal with all that throughput. So yeah, I'm cycling bad. So I don't know if y'all can still hear me though. Press 1 in the chat. If you can still hear me on YouTube, press 1 in the chat. Not sure if it's distorted or it's not, but I'm starting to buffer a little bit. Granted, I need to start getting the habit of closing a lot of different screens and all that stuff. But I'm just press 1 if you can hear me, because I'm basically going to go out and come back in. I'm going to go out and then I'm come back in and we're going to wrap this thing up. Right. Let me know if you can hear me on YouTube. Press 1. Press 1 if you can still hear me. All right. So that way I can fix this problem. I don't know if that's me. I don't know if that's YouTube. I don't know what it is. Right. But for the sake of it, I'm going to say, let me close out and come back in. And maybe that'll fix it. Let me, clear some of this cache, right? Cache all swollen from all these different websites and videos a little bit, right? Stressing my scenario out here. So I'm going to end it and come back in. All right, so I'm back. I'm back. I'm back. I'm back in the building. All right, yeah, we back then. Okay. All right. 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 So yeah, so Christmas is not going to be the usual Christmas year. So again, there you go. Uh, again, that's the essence of inflation. So yeah, it's gonna be about the season. Why you ain't getting that new PS60, right? You're not gonna get that PS60 console is because it's about the season, guys. So you know, be easy, guys. Be easy on your spouses and and your home and whomever, right? It's because of inflation, right? That's the excuse, right? That's your excuse. Right? Hey, it's because of inflation. I mean, what you want? What you want? What you want from it, right? Right? What you want? So you guys get the gist of it at this point, right? So no need for me to beat the inflationary horse any longer. We know that food, cars, and clothing and everything is up. We know that there's a carrying cost behind all this. We know that there's investments ideals that are still stoked out there that you can get into. It's not like the whole entire world is coming to an end because inflation is high. There's stocks out there that you can buy, that you can invest in, that are great for inflationary hedges, right? So again, that's the whole part about this conversation, this topic on this channel, right? I'm always looking to bring, the inverse, right? We all want to have a balance, right? Here's this, but here's the opportunity as well, right? So how to invest better. That's the end part of the conversation within the topic here. How to invest better. Well, those are some of the things that we talked about. Inflationary hedges, right? Because we know that these things are, are great to kind of navigate around inflation. You can navigate around it. You just got to be more selective. And so that's why we study. That's why we train. We have training sessions. That's why we go with these things, because we want you guys to keep it, based in your frontal lobe, so that way you can recount it when necessary. So when you go to research something, it'll instantly ring a bell. Oh yeah, I remember that. I remember that from training. I remember that from that conversation. I remember this stock for this, or I remember that from that. So again, that way you don't lose, right, focus, right? You don't lose that good, good knowledge that you got thus far to get you where you need to be, and you'll be solid, right? You'll stay kind of solid, right? And just to let y'all know, we're not. It's not just us. It's not just us, guys. It's not just us, meaning in America, right? It's not, right? It's worse overseas, right? It's worse overseas, right? It's worse overseas. If they tell you different, they're lying, right? They're lying. And a lot of them finna get ready to go back into lockdown. Netherlands on the way. UK is already thinking about it. Australia is already a mess. Australia is a hot mess right now. Australia is so raggedy right now. They literally on the back end of what they call some Marxism or communism in terms of they practice over there. They literally finna go into a civil war dang there. That's how bad it is in Australia. They're literally on the cusp of a civil war. I'm not making it up or even using hyperbole here. It's that bad in Australia because of COVID and people mental state and the government they mad because their economy messed up and these people are already squatting out, whatever. Moving on. Moving on. So one last thing real quick to show you what I'm talking about. Everybody getting it, right? Everybody can get it, right? Everybody can get it. Let me show you how everybody getting it, right? Let me show you why everybody's getting it right now. Look, inflation has risen around the world, but the U.S. has seen one of the biggest increases. Of course we do, because we're the land of decadence, right? We want everything big, bold, and bad. And right now, because of that, we'll pay anything for it. We just let people charge us anything and we'll pay it. Why? Because we sheep. And we think because we live in this country that everything comes at a discount to us because we rob and rape and pillage everybody else from theirs, but it don't. The government just find a way to carry that cost and make you pay it more than what you necessarily should be paying for it for, and you think you're actually getting a discount. See how that works? It's the ultimate hustle. So yeah, Americans are paying the biggest increase for inflation right now. So it goes on to say, right, Americans who have been to the grocery store lately or started their holiday shopping may have noticed the consumer prices have spiked. We know the numbers are up, right? This is a kind of article dated back towards Thanksgiving Day. So we know that number is beyond 6.2 now. Now it's actually 6.8, right? The CPI is up to 6.8. 6.8. So when you see 6.8, it really means that it's over 7. They always downplay the number because they don't even include, food and energy, right? Or gas, excuse me, into the CPI data, which is like blasphemy. That's sacrilegious. Like those are two biggest things you consume, gas and food. And they don't include that because they know the number will be a lot higher. See how they got you? Anyway, understanding why the rate of inflation has risen so quickly could help clarify how long the surge might last. That's important. And what, if anything, policymakers should do about it, which they're not, because they stuck. As a matter of fact, Joe Biden's Build Back Better plan, dead on arrival. As far as getting completed before the end of the year, Democrats are pushing for it. It's not going to happen. They've already pretty much, it's already in the law books at this point, meaning it's dead, right? They're not going to waste any time trying to get it done before the end of the year, which he needed that for a political victory, but whatever. So the Build Back Better plan, dead on arrival. Moving on. So the recent acceleration in the rate of inflation appears to be fundamentally different from other inflationary periods that we were mostly closely tied to the regular business cycle, right? So in terms of business cycle, we're talking about boom and bust cycles. That's somewhat ideal of what they're talking about as far as inflationary periods, right? You go up, you go down based upon inflationary, business and boom cycles. That's cyclical, right? You have moments when you go hard, and then sometimes you kind of cool off, revamp, rebuild, R&D, right? M&A, get your stuff together, then go back out there on the road and do it bigger and better before, right? That's boom and bust cycles, right? Explanations for the current phenomenon, right? Profit to date, right? That include continued disruption in global supply chains amid the coronavirus pandemic, turmoil in the labor markets, right? The fact that today's prices are being measured against prices during last year's COVID-19 induced shutdowns, right? So again, you're trying to measure what we dealt with last year as opposed to this year when it's supposed to be a little bit more better this year because we figured out at least, we got a little understanding of what's going on for us. COVID, we got businesses back up and we got shipping goods being moved a little bit, planes, trains, automobiles, all this stuff kind of mechanized again. So it should be a little bit better. But actually, it's worse. Why? Because they overplayed their hand on the printing press side of things, right? All these central bankers just said we have unlimited tools to use our advantage. Well, basically, that means we have unlimited free fake currency, fiat monopoly money to print ourselves into oblivion, and that should help out all our economies, right? But what it did, it actually made it worse, right? Because again, that dilution, they diluted your money even more. So you get less for the same price or more. You're getting less for the same price or more. Is that work? Got him. So this is the hustle. So, and again, meaning it's a wealth, it's a wealth theft that the world has never seen. Basically, that's what it is. I just call it what it is. There's no clean way to put it. It's a wealth theft, right? They stole a lot from taxpayers and left you holding the bag, your future generation. So a strong consumer demand after local economies were reopened, right? So we know that, right? So at least one thing is clear: a resurgent inflation rate is by no means solely a U.S. concern. Where we know that. So a Pew Research Center analyst, right? Data from data from 46 nations finds that the third quarter 2021 inflation rate was higher and more of them, 39 obviously out of the 46, than in the pre-pandemic third quarter of 2019. Interesting. They're going all the way back to 2019, not even 2020, 2019, right? So yeah, that's pretty prolific. So in 16 of these countries, including the U.S., the inflation rate was more than 2%, 2 percentage points higher last quarter than in the same period of 2019. So literally over the last 2 fiscal quarters, they seen this thing jump over 2 percentage points. That's unheard of. That means you really are starting to go what they call downhill fast, like a boulder downhill fast, a big snowball downhill fast, because the acceleration of the value that they exacerbated the idea of money printing to the point where it's starting to really get out of control, and they still don't want to stop. That's greed 101 for you right there, guys. That's greed for you 101. So I ask you again, do you think these people care about your feelings, your ferns, your furnace, your football, any of this stuff? Start with letter. Your funds, they care about that? Seriously? So this is reality. So yeah, it's kicking everybody in the teeth. And it's worse in some nations because of what? They already got weak economies. They're, again, if you have a touristic nation where your major aspect of your GDP is based upon your tourism. Now, some people can manage in the touristic nations because they really have, a good pipeline to be able to get people into their nations because they have, good weather all year round. This, that, and the third. Others can't. Right. But anyway, just showing you here. Look at the inflation has risen in many countries, right? But rarely as much in the US, right? Look at this here. Let me see if I can blow this up a little bit. Look at who inflation kicking hard in the teeth, right? We already getting hit too. Let me show you who getting kicked in the teeth. Look at Brazil. Brazil right now is up over what? Dang near 6.87%. Now this again, this was back in November, so it's worse now. Meaning if we're at 8% now, or 10% on the PPI, right? Producer price index, that means Brazil is up maybe near 12-13% right now, or somewhere around there about 12%. Right? On the CPI, if we're sitting at around about 6.8 or 7%, that means Brazil is sitting at maybe about a 9% right now. 9% inflation kicking them in the teeth. And they already kind of somewhat, not as developed as, like America and places like that. Turkey. When we talked about Turkey earlier, the Turkish lira on the foreign exchange, that's why they're getting crumbled. They're getting crushed right now. Turkey paying up there around the same price as Brazil in terms of inflation. U.S. coming in at a comfortable third place. Notice I said a comfortable third place is the USA. Could make this stuff up. You got an undeveloped nation in Brazil, number one. Turkey is somewhere in the middle, and they still struggling because they don't really have the economy we do. But we're at number 3. The most supposedly, quote unquote, the most supposedly modern country on the planet. We're sitting at number 3 in terms of inflation. Stop. Couldn't make this stuff up, bro. But we know why we're number 3. See, America, we want to be first in everything, don't they? Now, they even trying to be first in inflation. God, dog. See how they do you? They even trying to be number 1 in inflation rate. These people greedy, bro. They don't care. They can care less about your little feelings and your little, only fan, all this. They can care less about any of that stuff. So, yeah, it's kicking everybody in the teeth. Now, look at the nations that are actually doing a little bit better, right? Right now, who are actually in the green. Look at Japan, of all places, right? The Japanification, yeah, when we did that broadcast on them. Look at the Netherlands. But Netherlands getting ready to go back in lockdown. We know the Netherlands had one of the better, was it Netherlands or New Zealand? I could be wrong. I might be getting them mixed up. But one of them had like a really good, they were really good in dealing with COVID. It might have been New Zealand, but now they're going back. But the Netherlands, I think they're getting ready to go back in lockdown. But they have a very controlled economy. That's why too, right? They're small, but they're very controlled, right? Costa Rica, look at that. Look at Costa Rica doing really good. Who would have thought, right? Who would have thunk it, right? Costa Rica. Look at India, of all places. But all them people over there in India, right? They doing a little better than most nations like China. They're doing better than the UK and all them. Couldn't make this stuff up. Indonesia. China, well, we know China numbers are misleading, but that's why China over here in the green. We know they're going to definitely skew their data. And look at Argentina. South American country down there. A couple of them. Costa Rica and Argentina getting it right now, apparently. Because they're not, about just kind of pricing they citizens out of opportunity possibly. So they probably got their rates still firm, and they making people, hey, be conservative, be responsible. Because, we can't afford to take that blow like a lot of other people can. That could be one of the reasons. Who knows? But nonetheless, these people in the green, right? Because this is a Pew Research Center report, so they got, pretty good, good primary source data. So, yeah. So, it is real out there in the field, right? It's real in the field. So, where inflation is highest and lowest across the 46 countries, right? That obviously participated in this Pew Research poll. Annual inflation rate, third quarter 2021, right? We know now it's worse. We know it's worse now. So, look here. Pan in the green over here, at basically at 0 percentile value, right? At 0.1% to 2% value, more kind of, I guess khaki color, right? A little dirty brown. Then you got a little, darker brown, right? Then you got, I don't know what they call I don't know what kind of brown. Then you got dark chocolate, right? The different textures of chocolate there, right? But look at that. I mean, couldn't make this stuff up. Right? Couldn't make this stuff up. Right? Just, I mean, we look around this thing and just see how, look, knows that they didn't include Africa, right? Yeah, except South Africa, go figure, right? Yeah, the squad is down there, South Africa. We know what that's about. But I mean, this still give you a good understanding, right? Outside of some of the countries that ain't participated in this, but that, hey, it's real out there. It's real in the field. It's real in the field. You know, so again, in closing, guys, I want you guys to, you know, just see it for what it is. The data's out there. We're not just throwing stuff out there. We're not going to let the media dictate our value or view about inflation, because these are numbers that we can pull up on our own, raw numbers, right? From unbiased resources and unbiased sources, right? I don't need biased sources giving me my news. I'm sorry. I'm just too old to play that game any longer, right? You guys don't need biased sources, you know, to filtrate news for you. You're too old and too wise and too intelligent to realize when people are sitting there, soft shoeing around reality and real topics, right? Don't sugarcoat my, you know, my news. Don't sugarcoat, you know, look, y'all get it. Y'all get it, right? So be solid, be thorough, be researchful minded. And again, above all things, realize that a beautiful catastrophe is a good thing. Why? Because it puts you in the driver's seat. It puts you in the driver's seat once you realize how to eat off of it. I know it seems kind of weird in a way that you get a chance to make money when other people may not be in a position to because of whatever catastrophe that's out there. But these people have been doing it for ions, right? And eons, excuse me. They've been doing it for a long time. And it's about time y'all start realizing how to make sure you protect what you can, again, protect and grow in the same breath. Because the cycle is not going to stop. It's not going to stop. It's not going to stop. That's the sad part about this. It's not going to stop. Right? It's not going to stop. Right? So we may as well, you know, what else? My buddy on Shawshank Redemption, get busy living or get busy dying. Right? You either get busy living or get busy dying. Right? Because they're not going to stop. They've already made it very clear that they're not going to stop. So with that being said, you know, we're going to roll up out of here, understanding that, again, a beautiful catastrophe is a good thing. Why? Because guess what? You get to learn how to benefit off of it too, by being strategic and learn how to put your money to work for you thoroughly. Right? So shout out to you all who realize that. Don't run from it, run to it. Again, climb the wall of worry. Climb that wall of worry. Right? When others are fearful, that's when you get greedy. When everybody just is that, you know, exorbitantly too greedy, that's when you get a little fearful, right? That's the rubric, right? That's the rubric. Let's go.
Everything is twofold. What's joy is pain on the other hand. And what happens when the one that you love is the main cause of your suffering? I need you like I need air to breathe. I need you to save me from me. I'm caught in your wave, I'm drifting away. I need you to save me. Please don't let me drown. Please don't let me drown. Please don't let me drown. Please don't let me drown.
Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe.
I'm drowning with all of this darkness surrounding. You need me like you need air to breathe. You want me to save you from me. I know that you're trapped inside this wave. Who's gonna save you? Who's gonna save you from me?
I can't see you drown. affliction, yeah. I can't breathe, I need to get some air, but it's a toxic addiction. You're a guilty affliction, yeah. You can't breathe and you just need some air. Give me all of your lies, cause you're my demon in disguise. I learned to love the cage you keep me in, where the walls keep closing in, and I don't wanna die, but your presence is so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. A perfect storm, a beautiful catastrophe.
All right, guys. So we know what it is. We know what it's, what it's gonna do. We know what we have to do. And again, for what it's worth, I salute all of you all. Not because you come and hang out with your brother and we hang out together, because again, y'all know this is a people's first channel, right? We all for the people. We live it. We don't just talk it. We don't do dictatorships. We don't do echo chambers, like I like to keep repeating. We welcome each and everybody who comes in with a open mind and some data to share, some information to kind of help grow their situation. Because one thing about the stock market is not a competitive edge value that's given, because again, we're trying to show each other that one is better than the other. Here it's a consignment of, hey, let's use each other to become more knowledgeable, right? So it's a concerted effort is my point, right? We say Ubuntu, right? I am because we are, right? We know that's a African proverb for a reason, because we need each other. So utilize that. Use your tribe. Get with people who are out there trying to better their situations, who are honest about wanting to share information where at least you can research it yourself, right? Back test it, right? Do your own primary source research, whatever, right? Again, y'all know how this stuff go. And then again, submit yourself to the idea of trying to figure out other ways to grow your situation, right? Because again, people ain't finna just walk up and just hand you bags of money. The government definitely ain't gonna do it. All right. They're gonna take from you more than they try to give you. And if you haven't realized that at this day and age, then I don't know what else to tell you, right? It's a concerted effort, right, to continuously grow their wealth and take from your future, right? So we're trying to push back against that. That's why I call us anarchy, right? We anarchy 99, right? 2.0. We are anarchy 99 2.0 on the financial side of things, because a lot of us who are scared and looking at this information like, man, I'm straight, man, I'm gonna just go back and punch this clock. Well, hey, good luck with that, right? So you need other ways to get your bag, and so we just want to help you provide that, right? By coming on, disseminating information, showing you where to look, how to look, how to be more thorough at it, and then hopefully you can go out there and do the rest from there, right? So again, it's a relay, right? Relay race, right? So thank y'all for tuning in today. Thank y'all for sharing, subscribing, comment. Tune in next time when you see us go live. Definitely participate. We love to have you here. Of course, next time when I go live, of course, we're going to open the panel up. This time I just wanted to get through this commentary, because a lot of information I wanted to get out there for inflation, right? Because there's always a good, the bad, and the ugly, right? We did our, Fed Day commentary on FOMC Day, right? That was a good video. If you haven't watched it, go back and watch it, right? It's called Fed Day, like Dre Day, right? Right? Pun intended, right? Right? But no, go back and check that out so you can kind of see what's going on for the inflationary side of stuff, based upon the Fed, giving you the words out of his own mouth, right? His words, not ours, but we know what's going on. So that way you won't be, again, confused about all this. And then tune in when we go live, right? And thank you for supporting the channel. Again, if you do, feel the need to, my Patreon, not my Patreon, excuse me, my Cash App is down there, right? You want to throw your brother a couple of dollars, that's fine. Of course, I'm gonna use it on some fishing, some baiting, some lures, right? I gotta do my detox, right? So help me buy a couple of fishing lures, if anything, right? I got everything else. No, but there's my Cash App down there below. If you want to support me on that with level 2 for all the information, the content, hit me up on Cash App, African Emporium. Until then, y'all stay healthy, stay humble and stay hungry, right? Humble and hungry. And be safe out there for the season. Hopefully I get a chance to do a little something tomorrow before the pre-market or the futures market, I should say, because the markets did a lot of 180 stuff last week, and people still trying to make sense of all that, what happened for us, the news with the feds, right? So stock markets are all over the place. They might be trying to price in the Christmas rally. We'll see. It's going to be do or die next week. If we don't get a rally sparking before Wednesday, they pretty much can cancel the Christmas rally, because there's other more, I don't know, bigger news, a bigger fish to fry for us, the stock market, than just a superficial rally on a Christmas day, right? Or up until Christmas, where they normally get the, people feeling good. They're at home. They already, whatever, ready for the holidays. So they just go, consider from the stock market and, buy stocks. That ain't the case now, though, but we'll see. But just be ready one way or the other. All right. So shout out to everybody. Thank y'all for tuning in again. Look forward to us to go live again when you can. Subscribe, hit the notification bell so you get notified when we go live, so you can be there in the seats, so you can contribute, because I appreciate everything you guys write in the back chat, because you guys make this channel for what it is, because we're discussing something that's actually reality, right? It ain't no smoke and mirrors over here. We're talking about real data, real world, real reality, right? Things that could equate to a bag, right? You getting some money. Yes, I love it. So shout out to everybody in the back chat, everybody that came through today. Again, y'all know who y'all are, right? I don't have to do a roll call on the way out the door, because y'all already the family, and you always here supporting where you can. So shout out to y'all. All right. So until next time, guys, peace, pound, profit, Shimotep. I'll see you guys on the next one, guys. Peace, everybody. Peace.